So, you bought the lawn up here, are you? Good morning. This is the Insurance Rate Study Committee. If everybody will find a seat. Welcome back to the Capitol. For some of us, it's been since April 4th, sine die. I know some people have been busy at work on other study committees, but welcome. I'd like to thank Speaker of the House, John Burns, for appointing this Blue Ribbon Study Committee on insurance rates. The mission and the scope of this committee is to conduct a thorough examination of the insurance industry's rate-setting practices, profit margins, claims processing, and regulatory compliance to ensure that Georgia's businesses, citizens, and consumers are not being subjected to unjustified rate hikes. That's our mission. That's our focus. In short, what we are doing with this study committee is looking for ways to make insurance more affordable for hardworking Georgians. This is the first of 5 meetings that this study committee will hold. The second meeting will be in Savannah on September the 19th, Friday, September the 19th at 2 p.m. at Georgia Southern University's Armstrong campus in Savannah. All 5 of our meetings, we will cover any problems and solutions that are within the committee's scope. However, we would like to ask people at the Savannah meeting to focus on homeowners insurance and storm damage claims issues and things of that nature, if they have expertise on those subjects, in addition to other things that bear upon rates and premiums. Our third meeting will be on October the 17th in Columbus at Columbus State University. At 2 p.m. I'd like to thank Democratic leader Carolyn Hughley for scheduling that meeting in her hometown of Columbus, which has a very strong insurance community. So look forward to that one. On that one, car insurance, which is something that all 11 million Georgians know a thing or two about, as well as Georgia's premium tax that may not be as well known. Those are some topics to discuss on October 17th, in addition to general issues. The fourth meeting will be on November the 21st at 9:30 in the morning at Georgia Farm Bureau headquarters north of Macon. I'd like to thank Representative Jacqueline Ford from South Georgia for pointing out that that's accessible to Middle and South Georgia, and that our small business and agriculture community wants some attention on insurance rates and premiums also. And then finally, we'll wrap up the week before Christmas on December the 18th back in Metro Atlanta at the Gwinnett County Chamber of Commerce at 2 p.m. Today, we are going to have the privilege to hear from Georgia's Insurance Commissioner, John King. He does have to leave to go see his second grandchild, who is a newborn. So we're going to hear from him first in a minute. So I'm going to let the committee introduce themselves after we hear from the commissioner. We've also got a lot of knowledgeable speakers, including Professor Weston from Georgia State University and many other speakers today. Nearly 1/10 of the House is on this committee. And we are having 5 hearings, and the door is open to people who have knowledge of problems and solutions in this area. And so we welcome input, and definitely I am available, as are the 17 members of the committee, to talk to you and to get some results for the people of Georgia on this issue. Having a healthy insurance industry and insurance market where our 11 million insurance customers have choices and affordability, that's what we're all about with this committee. So with that, I'd also like to thank House Insurance Chairman Eddie Lumpson. In addition to Speaker of the House and House leadership, he has been very helpful, providing his years of leadership on the House Insurance Committee and making sure this committee touches all of the facets of this national problem. Once more, Georgia is providing Georgia solutions to a national problem with this issue of insurance for the benefit of people living here and doing small business here in Georgia. So with that, again, after we hear from Commissioner King, we will introduce the committee. But to get you with your newborn grandchild, come on up and tell us about regulatory issues relating to insurance rates and premiums.
Thank you so much, Mr. Chairman. I really appreciate the opportunity to, after being your insurance commissioner now for over 6 years, I really appreciate how deliberate you all have been about giving us the tools so we can do a more effective job in regulating this very important industry. And I really appreciate this study committee because there's probably nothing more misunderstood in Georgia than how insurance rates are developed and how do they go out to market. And so this is an opportunity to get into the details. I have an incredibly knowledgeable team led by Steve Manders, my deputy commissioner, who has been serving the state of Georgia for over 34 years. And so we want to make sure that our staff is available to this committee to be able to get into the details and talk about the historical context of why we have the rules that we have, but also how to really work on how do we make our markets, more stable and obviously more accessible to Georgia consumers. And I think that's I really appreciate the opportunity to share that with you. Chairman Reeves, I really appreciate you personally, allowing and inviting me to speak to you all today. I apologize, but I will be present in many of the other meetings, so y'all can beat me up appropriately. So, but I have to go and see my grandson. But my team will remain here, available to take any questions, so and offer any policy recommendations. I want to make sure that I remind everybody that my job as the Georgia's insurance commissioner, my number one job is to ensure that we have access to quality coverage at an affordable price. Like you all, I am elected to this position by the great people of the state of Georgia, which means I am directly accountable to the people of Georgia, not to special interests and not to the companies. And with your help, we have made tremendous progress in protecting consumers in the last several years. There's significant strides in combating abuses in our legal system in Senate Bill 68 and Senate Bill 69. These bills address the rising cost of insurance driven by frivolous lawsuits. Georgia tort reform mirrors Florida's 2023 reforms, which led to a 23% drop in lawsuits and is starting to show 3 to 5% rate cuts above. And what's most impressive is the new insurers who had left that state are returning to the state to help stabilize that market. And additionally, modifying filing use laws that prevented companies from sidestepping our office to implement 40% rate increases. I'm very grateful for that additional authority that you all gave our office. In creating a streamlined process with Georgia Access, where we were able to bring 1.5 million Georgians to get enrolled for healthcare coverage. One of the vast superior programs anywhere in the nation. We even outperformed the federal government. We beefed up our consumer services division. This is the division that investigates complaints. We've been able to handle over 11,000 complaints by Georgians per year, and extraordinary. And as a result of those investigations, we've been able to return $100 million back to consumers' pockets since I took office. And so I'm very grateful that you all have allowed budget process so we could be staffed to be able to investigate and help Georgia consumers. Well, we're very happy of all the work, the great work and the authority that you all have given us to protect consumers. It's also up to the industry to follow the laws that you pass and the governor signs. You might have seen this, but our office recently announced more than $20 million in fines against insurers for breaking mental health parity laws. This should not be a surprise to the industry. These companies with Georgia law have been on the books for 3 years. We did a thorough, very focused investigation, a market conduct investigation, and we found that these companies were violating the law, and we're holding them accountable. In the past, our office has stopped insurance companies from sending bogus non-renewal letters for older roofs, and we worked with y'all to get that stopped. Insurers using 40% rate hikes, and we told the companies that they could not refuse claims in the aftermath of Hurricane Helene just because the period required had expired for getting the construction or the remodeling done. However, my authority to penalize companies for breaking the law is very limited. When an insurance company breaks the rules, in most instances, the law says that I'm only allowed to fine them up to $2,000 per incident for non-willful violations and up to $5,000 for willful violations. When we want to thump insurers for breaking the rules, the current law has us working with one hand tied behind our back. And I would ask you all to, in part of your consideration, to consider allowing us to have greater authority to issue bigger fines. Many of these violations are brought to us by consumers who are being affected by insurers in real time. My office receives, as I said, over 11,000 complaints against insurance companies every year, and that number has only gone up. And we have recovered over $100 million back to consumers since I took office. We are taking a look on how we can, how we can save consumers more money by lowering premiums, and we're making insurance affordable. One of the main factors in Georgia that is crushing us is fraud. We're number 2 in the nation for fraud across the country. Every consumer is affected by this level of fraud, between $400 to $700 of additional cost to the consumers as a result. Our challenge is you all have given us the authority to hire some very incredibly competent investigators. We have the right to go and do cases and investigate and hold people accountable. My challenge, and I'm looking forward to working with y'all, is how do I encourage district attorneys to prosecute these cases? And I want to make sure that I get the opportunity to pitch to you all some ideas that we have to encourage district attorneys to investigate and prosecute some of these cases, because it affects all Georgians across the board. These are hard cases. They're complicated. And I know that this is not a hit at the district attorneys. They're overwhelmed with the number of prosecutions they're making. But I'm looking forward to working with you so we can turn the tide. The fact that Georgia's number 2 in the nation is not something that I'm very proud of. Our team has been looking into laws recently passed by some of our neighboring states. And we're doing the research to see how they will work in Georgia. I'm optimistic that these solutions will be viable options for this committee to consider. And I'm looking forward to continuing to work very closely with you all and bouncing some ideas on how we can get balance. And so we're helping the Georgia consumers who are in desperate need of continued attention by not only our state, but also by our office. And so pending any quick questions you have, I'd like to turn it over to Steve Manders, if it's okay, sir.
Thank you, Mr. Chairman. Commissioner, thank you for being with us. Thank you for the work your office does, and congratulations on the new grandson.
Thank you, sir.
Certainly don't want to keep you here too long. I appreciate the work that you're doing to address the mental health issues. That's an issue that the House has led on. Of course, our late Speaker, David Ross, was the champion of that. So we're proud to see your office acting swiftly on that. What are some surrounding states, when you talk about the fine amounts, what are some of our neighboring states at?
I'll have to run that down, sir, but we're one of the lowest. But and Steve will probably be able to handle this question as well. We haven't modified our fines in, I think, over 30 years. And so we're still operating with that mindset. And I think it's worthy, especially if you look at some of the disclosures that we get in from insurance companies that we need to increase the pain to get them to make sure they're compliant.
Absolutely. Thank you, Mr. Chair, Mr. Commissioner.
Thank you, Representative Kelly. We have Representative Al Williams.
Thank you, Mr. Chairman. Thank you, Commissioner. Always good to see you. And believe me, I'll walk with you and ask this question. I don't want to stand between you and seeing you right now. But clarify for me if I got some incorrect information. Is it not true that most of the companies that left the market in Florida left because of hurricanes and climate, et cetera, where the vast majority of their population either lives on the water or immediately to it? And is that not true? Because for years, I've seen them moving because of that. So
That would make complete it's common sense, but the problem is a number of factors. A lot of the factors that affected Florida have not been the factors that affected us. A lot of it was the abuses in the civil justice system, roofing, companies that did not have an appropriate amount of reserves to be able to pay rates. That's something that we've turned down a number of companies that wanted to come from Florida, that wanted to come to Georgia. And we looked very hard. Okay, what is your reserves? Because you have to be able to pay claims. And if they were not strong and they left the state because they were in shaky financial, we're not allowing them into Georgia. So you can go to, you got 48 other states you can pick, but so we turned down a number of companies. I wish it was a bullet. I could say this is the reason. It was a number of factors. Storms were a factor, just like storms are a factor in damage. In Georgia has been one of the factors. And most people think that we get them the majority of the damage on the coast of Georgia. We know that the majority of the catastrophic storms that come across the panhandle of Florida from southwest Georgia and across, just like Helene did. And those are the areas that we have to really spend some time with Representative Hughley in Columbus. Columbus has been an area that's been affected. But you automatically think storms, automatically everybody gravitates towards the coast instead of looking at what. And so we're developing the data set. So you're making decisions based on data, not on anecdotal. And so we're looking at how the trends and how the areas that we need to go and spend more time in it. Our biggest challenge today, I will tell you, is educating the consumer. Most consumers are buying the policies because they see it as a tax. I want to buy the cheapest insurance so I can drive, so I can get a mortgage, so I can get healthcare. And then they realize that they're not appropriately covered when they have a claim. And that's what the complaints are. We have to do a better job on educating the consumers. And I think the relationship with agents is critical to make sure that our consumers are properly educated about what they're buying.
Majority Whip James Burchett.
Thank you, Mr. Chairman. Good morning, Commissioner. How are you?
Doing well, sir.
Little boy, little girl?
Okay.
Little boy, congratulations. That's fantastic. You and I had conversations last year, and I want to thank you for all the hard work you've done as the insurance commissioner. But my question is surrounding the insurance premium tax. Could you speak to us about how companies, when they're making a determination as to where to domicile, how the insurance premium tax plays into their determination of whether to do that? And also, what is the impact of the insurance premium tax on our consumers? As I understand it, we may be the highest or the top 3 insurance premium.
One of the highest, yes, sir.
Could you just speak to that a little bit so that this committee can, as it undertakes its charge, can at least consider that information?
There's probably nothing more misunderstood with the premiums tax. Most communities don't even acknowledge every city and county gets half of that tax remitted in based on the census. But very few communities actually acknowledge that they're getting this money from the state. And so people don't realize, and this is part of when I travel across the state and I talk to agents, I says, you need to talk about how you're contributing to your local community as a result of your work. And my hope is that premium tax gets used to reduce risk. We don't have the authority to tell cities and counties how to use that money. It's not my role to do that, especially as being a former police chief in the city. Yeah, I would get all the chiefs of police and sheriffs probably going after me if I told them how to use that money. But as Georgia's risk, I see my role as the risk manager for Georgia. I would want these communities to reduce risk, to have stronger building standards, more resiliency in their communities, and I would hope that they use that money to do so. But unfortunately, very few communities do that. Half of that tax, and the problem is that we're one of, I think Alaska is higher and Hawaii is higher. And so companies, not only do they have to pay a high premium tax, but also they get penalized if they're operating in other states. So very few companies want to be domiciled in Georgia because it hurts their bottom line. And so what we do is we work with companies, we work with captives to try to encourage more companies to hire, especially we have true premier risk management programs in Georgia course, Georgia State University, I got to give a call out, fantastic talent. And we have University of Georgia. And the problem is that all that talent that we graduated leaves the state because most of these companies are based in domicile in other states. And I think we're losing out as a result. Don't get me wrong. The premium tax is incredibly important for local communities. No local community is going to tell you that they don't need the money. And the state takes half of that. And by the way, none of that stays with the department. It all goes into the general treasury. I want to be, and so it is effect. And I think Steve will get into the weeds into how that gets allocated, but it's based on the census and how much every city and every county gets a check.
Chairman Joseph Gullett.
Thank you, Chairman. Commissioner, congratulations.
Thank you, sir.
It's fantastic. So you talked about fines. I know you mentioned the $20 million here. I think even before tort reform, you talked about $23 million in fines. So $40 million of fines to insurance companies. What are you doing to make sure that those aren't built into the costs of insurance for Georgians? Like, how do we make sure that those fines just don't carry to the consumer? And then just one more.
Yes.
Is what can we do legislatively to make sure that that doesn't happen? I hope did you have some boundaries around that? And then is there anything legislatively we can do to make sure additional guardrails?
It's humbling how much authority this office has. And I will tell you, this is probably what we've had misconduct from previous commissioner. Representative Hughley always gives me that look, because she always reminds me, we've suffered, this office has suffered as a result of the misconduct of previous commissioners. And the legislature took, and rightfully so, took authorities that commissioners were abusing. But I think we've now swung to the other extreme on authorities that people sometimes are not taking the sanctions from this office seriously enough. And I think we need to, I hate to say it, we got to increase the pain for people to operate. We want to be able to get it just right. We don't want to go too far to one end or the other, because then if it affects companies choosing not to operate in Georgia. Georgia's a great place to operate insurance. It is essential for our economic development, to us to continue being the #1 state to do business in. But people have to be able to have affordable insurance. And by far, the majority of the companies operate, they do the right things. Every once in a while, they get out of whack. And my job is to be, I remember my role as an Atlanta police officer, directing traffic. My job is to direct commerce, to make sure it continues flowing. But when somebody breaks the rule, we pull them over, we give them a sanction, and we get them back on the road. And we watch them to make sure that and so we have an incredible amount of authorities to track, to make sure. And we go and revisit and recheck our work to make sure. And we're also, with 11,000 complaints, we're very sensitive to driving our investigations based on those complaints of consumers. We try to encourage people to file complaints because that drives our homework assignment. I hope I answered your question.
Just want to make sure, how are you making sure that those fines aren't being passed back to the consumer?
Watch the rates of the products. I mean, believe me, sir, a $20 million fine on an insurance company, they're making, and just in their investments, they're making sufficient money. They don't need to pass it on. Now, fraud gets passed on to the consumer. And that's something I'm very sensitive to. We have a bigger problem with fraud than them passing on.
Democratic.
By the way, the workers' comp will not cover your loss of hearing.
I know that noise was just for me, but fraud is what I wanted to ask you about. How is it that we're #2 in the nation for fraud, and what are we doing? Because we know that, as you just said, fraud goes back into the bottom line of what our consumers pay. What are we doing about that?
Well, you all have allowed us and funded. We've increased 3 times the number of investigators, post-certified investigators, because law enforcement agencies do not want to be, even our great relationship with the GBI. This is a very specialized, very technical type of investigations. We are the partner of choice. We have our agents spread across Georgia. We've grown our investigations. My challenge today is finding district attorneys that will prosecute cases because they're complicated, they're hard to explain to a jury. And so I got to work harder and I need y'all's help to be able to fight this. But we're putting people in jail. We're, and the other part of it is we have a generational challenge today. And I think you've heard this in end quote too, is that we have an attitude now of folks under 35 that don't see anything wrong with defrauding insurance. We have a culture communications challenge as people, oh, insurance company, those are the big guys, you know, and this is, you know, and the problem is that all those costs get passed on to the consumers. And so we have an educational challenge, but we also we got to prosecute some of the wrongdoers.
But my concern is, why are we number 2?
Because we have a tremendous amount of activity, insurance activity in the state, and we have not pursued this appropriately. Saying that we're going to lock our way out of this problem, we're not going to arrest our way out of this problem, but that has to be one of the components.
Somebody has figured it out, and we just need to find out where that state is.
Well, Florida was well, you know, the problem is the cost. Florida was number 1 a couple years ago. Now they're number 4, but they put 75 to 100 agents against this challenge. And they prosecute it at the state level. They don't prosecute it at the county level.
Kelly, another question.
Thank you, Mr. Chairman. Commissioner, who is the best state with dealing with fraud?
So, I'm so sorry.
Who is the best state with dealing with fraud? Which state has the lowest amount of insurance fraud? And what could we do from their
Well,
best
The
practices?
problem is that we have states that don't have hardly any fraud because they don't have any people. And so it's a tough, I mean, you're in the middle of Montana or Wyoming, you know, there's not going to be a lot of fraud. So there's states that do things well. For example, I hate to give California any credit, but they have a grant that they give grants to district attorney's office to prosecute insurance fraud. And when a district attorney does not prosecute cases, they take that grant away and give it to another DA office who will. That's something that this promises is worthy of further research.
Is there a public record of the fines that are levied per insurance company? Like if I go to your website, could I look and say X insurance company has been this many complaints, this many fines?
We publish the consent decrees that we have with the companies when we find them.
The consent decrees, the ones they agree to, or any type
The
of
ones, yeah, we every time we issue a fine, we force the company to sign a consent decree because I'm not just interested in finding them. I want them to fix the problem. And part of that consent decree is that they will agree to fix the problem or else more fines come.
Do you, outside of the $20 million fines that you levied this year, do you know who the biggest offenders are in Georgia?
The problem is with that question is that I got to be careful because the biggest offender might be the one that has the biggest market share, but that doesn't mean that they're the worst. Does that make sense?
Kind of, but we could acknowledge they're the biggest market holder while also saying they're the biggest offender.
Right now, I'm not happy with any of them. I'll tell you that. I am not. I mean, we expended so much political capital on tort reform. And what I expected, and I communicated this with the companies, is I expected them to stabilize the rates, if not lower the rates, knowing that a lot of cases are still caught up in the court system. And that's what I want them to do. And they've been very reluctant to do that. And I know one company lowered the rates by 3%. And I mean,
Who is that?
State Farm. They're the largest carrier. But they're investing on what they're seeing in Florida. They're investing in the future and they're trying to project and they can manage, you know.
Hindsight's 2020, but should we have included bigger sticks in the tort reform package?
Sure. We got it passed by one vote. I was glad to get it in.
Maybe we got three more.
I was glad that we got the sticks that we got because it was razor thin. I know many of y'all felt the pain on that. I was glad that we got what we got, and I was very appreciative because I know this was incredibly hard on you all.
Majority Leader Chuck Hill.
Thank you, Mr. Chairman. I'll try to hold this back. All right. Well, good morning, Commissioner. Thank you very much for your presentation. Congratulations on the new member of your family, and really appreciate your service and your testimony today. My question's more just kind of zooming out here. I'm hearing from my constituents. They're concerned about their premium increases, the expense that they're having to carry as a family and with their businesses, and just year to year, the impact on their bottom line that they're experiencing. And just coming at this from kind of a free market mindset, with my philosophy, it just seems to me if there were more carriers available, that would in a lot of ways drive down premiums. If there's greater competition within the marketplace, that there'd be opportunities there. So maybe I'm not asking for specific proposals. This is our first of several meetings we have coming up. But do you have any thoughts about ways that we can encourage carriers to return to Georgia if they've left in the past few years, or maybe carriers that haven't been here previously, reputable folks? You were talking about the problem people out of Florida, reputable companies that may want to come to Georgia for the first time, offer their products to Georgia residents so that we could go at it that way to drive down premiums.
We're starting to see that. We're starting to see companies that pull back. They didn't leave the state completely, but they stopped selling policies. We're starting to see them coming back because tort reform. And so we're starting to see that. The key is managing those expectations to make sure that people, you are right. The only way that I can really drive a lowering of rates is by increasing competition. And I'm not interested. I know there's a couple of company reps. I'm not interested in getting the big carriers because they have such a, I'm interested in medium and small carriers that will focus in a particular part of Georgia, that will go into a niche type of industry and to go and sell. That's why our captive, you all changed our captives. Chairman Lumsden assisted us in changing our captives so we can be more attractive state to go and get that specialized type of insurance, because Georgia's very competitive there. And we're making our mark in getting carriers to come to Georgia because we have a stable regulatory environment. We don't play games. We tell people the answers to the tests. This is what you can expect. These are the rules. Don't do these things or else we're going to thump you. We tell them up front. We want them to make their decision, but we're starting to see those, and we can give you some additional details on some of the tools. But premium tax right now is from our domestic carriers that we've had here in Georgia. That is an incredible pressure point. It's a factor.
All right, thank you.
Chair Bruce Williamson. Merle. Thank you, Mr. Chairman. Commissioner, thanks for highlighting this problem we have with fraud in Georgia. Is the department got any feeling or which lines of insurance are experiencing the most fraud?
God. Think auto, because it's the one that touches most Georgians. We got a tremendous problem with fraud in probably healthcare.
What about workers' comp?
We don't, obviously we share a lot of duties with the workers' comp board. We're not seeing a tremendous, our workers' comp lines, and Steve will tell you, that's the most stable. And it's been one of the reasons why a lot of companies are choosing to come to Georgia, because we have a very stable, the workers' comp board does a wonderful job managing that, and we manage the companies. We do have a spike in construction companies. We've had some issues with people issuing fake certificates of insurance to get jobs and contracts, and we're working with the workers' comp board so we can police that more effectively.
So it's the automobile lines that you
Automobile and health. Maybe Steve could probably add some other more details, but I think those are the ones that I get beat up the most when I go travel around the state. Those are the two lines of people that just beat me up the most about.
Thank you.
Representative Mathiak.
Thank you, Mr. Chair. And thank you, Commissioner, for spending time with us, especially with that new baby. Congratulations. You spoke a little bit about education of the consumer. And when the storm came through my community, that was something that I faced, is my constituents not really understanding what their policies covered. What will the department do to help us educate our constituents?
I will tell you, we spend a lot of time, and I'm very grateful that companies and you all, when we come to, we travel around the state, we call it insurance tour. And we travel across the state of Georgia. We meet, we want to hear from agents. We want to talk to local leaders. We want to talk to, legislators, and have them basically tell us what the problems they're facing in their local communities. That drives a lot of our legislative agenda. And so it's an incredible opportunity. But we go to every Rotary, every Kiwanis Club, everywhere. And what the essential part of this is encouraging people to have a relationship with an agent. The agent is critical. A lot of companies have gone to apps to sell a lot of their coverage. The problem is that then people choose the lowest premium because it's the cheapest, not what the one that offers the actual coverage based on their risk. And so we spend a lot of time encouraging agents. The reason Georgia Access is so successful is because we have 15,000 Georgia agents selling that coverage in Georgia. And they're able to communicate and tell the consumer, this is what you're buying. That is critical part of this conversation. And I think we need to encourage it more.
Mr. Chairman.
Chairman Gullett. Or you got a follow up? Oh, yeah. Representative Mapiak.
I wanted to thank you, especially in the healthcare world, when my constituents have an agent of record and not just somebody on the phone in Madagascar or somewhere. I so appreciate that. I left an insurance company because they would not allow me to have my agent of record. So thank you.
This is how I hold companies and agents accountable. I license them. I need to be able to find, as they say in the Army, I got to find that belly button that I got to push when something bad happens. And so an agent of record is crucial. And this is why the federal government was not as successful on getting the ACA, because they don't have the authority to license agents. We do. And when an agent breaks the rules or does something fraudulent, we take their license or we put them in jail.
Thank you, Chairman Gullett.
Thank you, Chairman. I think there's a code section that gives you the authority to approve or disapprove rate premium increases and decreases. And so with that authority, can you tell me what the insurance companies are coming to you and what you're looking for in order to grant that premium increase?
Sir, if you allow me to punt to Steve, because that is, most people in Georgia think that I'm the czar of rates. No, I'm not. I'm the blame catcher. I'm official blame catcher for rates. And because, yes, I approve them, but the legislature only gave me certain authorities that I can use to disapprove rates. And the problem is we're also victims of our success. Georgia has such a good market. To disapprove a rate, I got to show that the market is not competitive. And so in a perfect world, and this is the problem that we've had with insurance commissioners in other states, but also in Georgia. When they exceeded the authority, when they had the authority, they abused it. And you all took that authority away. But I'll let Steve go into the actual parameters that I can say a rate is not. It's a very specific, the legislature was very clear on what are the things that I have to show that a rate is not appropriate. Discriminatory, I got to show that, or that we don't have a competitive market. It's the forces of capitalism also have to be played into this. And so we have some ideas that we'd like to continue. We're running these down from other states that we'd like to come to this committee with some ideas to curb some of the potential abuses down the road. But we got to flesh these out with our legal team to make sure that those are appropriate within our statute that we have authorities for. But more to follow, sir. But I'll let Steve That's the meat of his presentation, is actually going through the sausage making of how does a rate become, how does it go out to the market? And the requirements that this office had, before we can say no, there's certain parameters that I only have the authority on. I can slow them down, but ultimately it's very difficult for me to say no.
I've got a follow-up. Mr.
Charlie Whitworth.
So every rate increase, the commissioner's office has to approve, is that correct?
No, not every, we have a provision of file and use where they can file it, use it, and then I have to go, if I find that the parameters of the legislature has given our office, then I have to go and stop it and have it repealed back. If they violate any of the provisions that the legislature has given, it's not automatic. That used to be, prior approval, where they had to come and get the agency's prior approval, but that got taken away from our office in 2014.
So then if they want to raise the rates, they just raise the rates and then you take a look at it and
We have a good enough relationship with them. They give us this is the rate that we're going to do, and they give us their rationale. They give us all their work done. But the ability of me to say no, I end up having to negotiate with them. When a company, a year, 2 years ago said we need a 40% rate increase, I said, look, you're going to break the back of Georgia consumers. You need to work with us, and they reduced it because they had confidence that we were going to be honest brokers to them. But 40% rate increase would have broken the back of people trying to find affordable health and homeowners insurance.
yeah, that's one of my biggest concerns, as the leader mentioned earlier, is, one of the biggest things I get hit on from back home is folks saying, hey, I can't afford my car insurance, can't afford my homeowner's insurance, all these insurance they're paying. And my question would be what is the rationale? You mentioned earlier that they're making plenty of money, that they can absorb $20 million.
They're making money off their investments. Stock market and real estate and all the other things. There's many lines in Georgia. The insurance companies are taking losses. We've been taking losses for 10 years. Commercial auto is one of them.
But they're making money.
But we're making money in the stock market, real estate and all. Yeah.
And so what is the rationale then when they come to you and they say, hey, we want to raise rates by 40%?
I don't know. So we need to come up with another number. You need to spread your strategy on how to get your company out of the hole over several years, not try to make up your losses in 1 year. But ultimately, they vote with their feet.
Yeah.
If I ultimately say, no way, you're going to have to sue me. Take me to Fulton County and sue us. They vote with their feet. And again, less companies drives the cost of insurance.
I was more thinking like, what are they saying to you? Why are they saying to you they have to raise the rates?
The losses, they're bringing, they show us their books on their losses. Tort reform was one with big drivers, but fraud is another one. There's a number of factors. The economy. I mean, people don't realize the cost of parts, repair parts, chips coming from overseas. All those are factors that influence the bottom line of companies.
So yeah, this is the thing that's hard for me to partition. And maybe you're in the business and you know how this works, but if a company is making money, if it's on their investments or on their lines, they're making money, right? So if they make $80 billion, it doesn't matter to me if they're making it on their lines or if they're making it on their investments. The company ABC is making $80 billion. So when they come and say, hey, we're losing money, we need to increase our rates, it's hard for me to rationalize. Well, I get you may be losing them on this line, but you made $80 billion in the first quarter of the year. What do they say?
Why would they want to sell that product at a loss over multiple years?
I mean, I suppose because they get that money to invest to make $80 billion.
I get it, but if you ran a business, you're not going to sell a product if you're running a loss for 10 years.
That's fair. That's fair.
And to believe me, we fight with them tooth and nail. I mean, there's some legislative affairs folks from companies that they get a haircut when they come to our office because they're not going to leave with what they asked. No company has gotten the rate that they've wanted coming into our office.
100% believe that you are holding their feet to the fire. I'm just trying to figure out what is it that's their compelling argument. We're losing money here. We're making this $80 billion, but we're losing money on this line. I don't see where they come, where they're coming from as far as like, we need to raise the rates. That's just it. And I appreciate everything you're doing.
I feel your frustration, sir, and I share with it.
Thank you, Mr. Chairman. Mr. Commissioner, I don't want to keep you from that new grandson, but talk to us about the fact that there has to be balance in the market. If we by force price policies below what it costs, then what's going to happen to the market?
It gets tighter.
So your job is to do
To keep balance. My job is to keep the balance, as you say. Yes, ma'am. But I want them to make an ideal world. I want them to make just enough profit so they'll stay in business, but not break the back of the consumers in the process.
exactly.
And believe me, that is probably one of the hardest things. I'm the advocate for the people, but I can't wreck the industry in the process.
Then the other thing is not all companies are going to have the same return on their investment. So if it's based on investments and not the actual cost of providing the service, then you're going to create an unfair marketplace
Yeah.
for the larger the carrier, the more market share they're going to be able to handle if that is how you operate. If my understanding is correct.
You're completely correct. I mean, we've had companies that will come into the market, sell a product so low because they were trying to get market share. They sell it cheap. And then within a year or 6 months, they have to increase it because it's a brutal competitive market. So they'll come and lowball a product just to get into the market and get the market share. And then they'll come around a year later and says, hey, we've been taking these losses. We got to increase the prices. And by then there's no competition.
And what happens to the consumer when
The
you?
consumer gets caught in the middle. They get crushed because they have less choices. I absolutely agree with you.
Chair Williamson. Thank you, Mr. Chairman. Commissioner, I think the Majority Whip he asked a very good question about where the money's being made, but that's industry wide. Are any companies proving to you that they absolutely lost money in Georgia, company wide on all their book of business in Georgia?
Yes.
So that, and
There's companies that they're not leaving the market because they know that if they leave Georgia, I will not allow them to come back in. But what they're doing is selling less and less policy. They're pulling back their exposure.
and I think maybe an illustration would be that any given business, let's say it's convenience stores all over Georgia, the company's making money, but they have stores that are losing money at a certain point in time. If you can't turn those stores around, then you've got to divest yourselves of that store. So getting back to the multi-line carriers that do write different types of policies, they're going to be forced at some point, if that store is not making money, that silo, that line of insurance they're making, they're going to have to exit that and go out of business.
You point out a critical problem that I saw. I never worked north of North Avenue as an Atlanta police officer. I always worked Southeast Atlanta. The majority of people in Southeast Atlanta buy their groceries in small convenience stores. They don't have a Publix or Kroger in Southeast Atlanta. You know, McDonough Boulevard doesn't have a Kroger. You go to a convenience store. These stores were getting crushed because they couldn't afford premise liability insurance. And now companies want to sell premise liability, but they won't cover assault and battery. Well, what good is to buy premise liability if you don't have and so these small stores, one incident, they're done. And that's why I was trying to advocate so strongly to make sure that we stabilize that market. Now I have to force companies, now that you've all done the real hard, and I'll tell you, pretty courageous, because I know this was painful to you all, both parties. But now I have to get these companies, hey, we've taken this big risk off you. You need to go back into these communities and offer affordable insurance so these stores can operate, because we're creating food deserts. People are having to ride Uber or MARTA to go buy groceries. That's just flat wrong.
Thank you, Chairman. Commissioner, you had mentioned several times that fraud being one of the reasons why our premiums are high. So, and you had mentioned that you're not seeing these cases being prosecuted. So what kind of data or investigation are you actually sending to the DA's offices? And what are you hearing from them back as far as why they're not prosecuting these cases?
Our investigators are incredibly talented. We have access to the company's databases to be able to develop strong criminal. We're unique among any other agency in the state of Georgia. We actually get to see a lot of the work of the insurance companies in the losses to be able to identify fraudsters. And we prepare these cases, we make arrests, we take out warrants. The problem, and this is not my beating up on district attorneys, especially in urban areas. They're just so overwhelmed with violent criminal cases that they said, and this is part of the education challenge that we have, is that a lot of people don't see this insurance fraud as a real crime. Oh, you're just going after an insurance company. They got plenty of money. It's a Robin Hood effect. And the problem is that all those costs getting passed on to the consumer because the consumer ultimately pays. And so I have to spend more time talking to district attorneys, the ones that I know. I'm going to come and ask you all for help to talk to your district attorneys to convince them that this is, and we have to come up with, I would recommend that we come up with some kind of carrot too, to incentivize them to prosecute insurance fraud cases. And we're not talking about somebody that overestimated the damage on their car. I'm talking about folks that do multiple lines of fraud. They're not just involved in insurance fraud. They're involved in all kinds of other financial transactions, identity fraud. They do it all.
How many, if I can have a follow-up, approximately how many cases are you seeing, these big fraudulent cases for the year, and what percentage are not being prosecuted?
I have to run that down, man. But in all fairness, we're actually investing in technology to be able to help us identify which cases are the most prosecutable. Now, I'm having a lot of success, especially when we have a large storm. We deploy to communities. We go and show up at the sheriff's and the local police chief and the fire chief. Hey, we're here to help you, whatever you need. But we're also going to be in the neighborhoods where communities were affected to hand out educational pamphlets so people can be watching out for fraud, especially roofing, tree removals. We've been incredibly successful. And when we go outside of the metro areas, the district attorney's office really appreciate the help, and they'll prosecute, especially a tree company coming and defrauding a number of customers. But we having some resistance, and please don't take my remarks as taking a shot at district attorneys. They have impossible choices to make. But I need to make a better case to encourage them to prosecute, especially the worst of the offenders, because they're now realized that they have a sweet spot. As long as they stay under $2 million, with the U.S. Attorney's Office won't touch them. All that below that they're running roughshod. And so it's encouraging folks because the chances of being arrested or being prosecuted are pretty low. Especially Fulton County. Fulton County, I hate to say, is the worst.
Representative Dr. Michelle Al.
Thank you, Mr. Chairman. Thank you for coming to talk to us today, and especially for levying those fines on violations of the Mental Health Parity Act. I think it's probably clear from the amount of the fines in aggregate that you've issued that people are consistently violating this law despite us passing it 2.5 years ago. So my question is, and you may not have these exact numbers, but just roughly, what is the average fine for each violation of that Mental Health Parity Act versus what is the average cost of the claim that is being denied in violation of that act? And the reason I ask this is that obviously if the fine is not in excess of the claim being denied, it's actually cheaper for them to keep breaking the law.
At $2,000 for per event, and for a willing violation is $5,000. So if you just look at it from the economic standpoint, yeah. Now, in all fairness, I don't think any of the carriers would willfully go. I don't think they're making their decision based on, oh, we'll just pay the fine. If they do, they will have much bigger problems with me in the Attorney General's office than they got already. And if I could prove that, I will crush them. I mean,
I don't doubt that. But certainly if the fine is not at a level that it's an adequate disincentive, it serves less of a purpose aside.
and I think it's something that's worthy of this committee to study. Any additional tools that we can get, in law enforcement, we call it pain compliance. We probably need to do some of that to get some of these companies to pay attention the first time we tell them, not wait 3 years.
Thank you. Congrats on the baby.
Thank you.
I know we're getting close to a flight and departure time, so we'll get you out of here as quick as possible. I brought the code with me. It's not even in one book. It's 2 books. So we got a ton of stuff already on the books. You've highlighted some things that need updating, like fines. I want to just open the door to you and your department. Let us know of things in the code to update that may have been on the books for a while and are no longer meeting the challenges of 2025 and 2026. Let us know on that. Here's a question I have. You did a lot of work on the direct action bill, which was even before tort reform. You worked a lot with the governor on tort reform. Georgia, your department has a lot of data. NAIC has a lot of data. You've got the top 10 insurers in a state who often have 50% or more of the market. From direct action that's been on the books a while longer, from the data you've reviewed over the last several years, what are things looking like in terms of profitability with personal and commercial car insurance? And where's some room for improvement, either in the way of legislation or regulatory action, or on the industry's part? Have you seen, in addition to the one big insurer you mentioned, have any insurers started dialing down their rates and premiums?
Mr. Chairman, it's too soon to be able to tell if the trends. One company is leading, and I think because they're big enough and they obviously realize what a great public relations strategy is to reduce rates. The other ones are waiting to see. I'm beating them up pretty hard because I said, look, we don't have time. We don't have time to wait for the cases to unroll out of the court system. And that's one of the reasons that they usually tell me. I said, guys, you got to lead. If you want to stay and be in good standing in Georgia, you will get a sizable market share if you reduce your rates and showcase that the hard work that the legislature did was worth it. It's hard to explain this sometimes because most consumers, you see tort reform is like, in Spanish, tort is torta, which means sandwich. That's about as, most people don't understand what tort means. So hey, we spend a lot of time trying to explain. And so that's what we go on the road to talk to local communities about what this means and what is our expectations. Now, now I have a lot more tools to pressure companies to do a better job on reducing rates because we took their biggest risk off the table. Now they need to behave that way.
Representative Williams.
Thank you, Mr. Chairman. I think you can see by the questions that even though you have denied being the czar, you are definitely the big kahuna.
No, I'm not the czar, sir.
I just wanted to
I'm the
say-
humble servant of the legislature, sir.
Oh, that's humbling, sir. But what I think that you will have to admit, as everyone else will be, the voters and the citizens of Georgia in the next 3 to 5 years are going to want to see that promised relief and not graphs and figures.
I agree.
Thank you.
I mean, this is one of the things that I'm working with insurance companies. They have to do a better job of communicating to the consumers the goodness of insurance. Because right now, people hate insurance. Their reputation, their public relations is, I'm encouraging, they need to do. And I tell them, when we go to a claims village, when we have a storm damage, having them videotape or take a picture of them handing a check to somebody that has severe damage in their home and showing that the promise is being completed, or somebody buying a claim, is an incredibly powerful visual. Not the guy with the, with the red T-shirt or the lizard and all that. That's great. Handing a check to somebody that's been suffered a loss is incredibly more powerful to me, and I think the rest of Georgians.
It looks like we've got 2 or 3 more questions, so we'll be brief on that. Majority Whip Burchett.
Super quick one, Mr. Commissioner. Um, first, you've been up there a long time doing a good job, so I want to
Thank you.
congratulate you on that.
It's not as bad as the budget hearing, so.
Mentioned fraud a couple times, and can you elaborate a little bit more on, is it fraud on the consumer side? Is it fraud on the provider side? Is it?
All of the above, sir. All
Okay.
of the above. I mean, the imagination of somebody or people to defraud this industry, it's inside the industry and outside. Because realize when they feel that there's no consequences in prosecution, the imagination is, I mean, we got folks renting a rental vehicle and then backing into their own car and then putting in two claims that max out the insurance on the rental vehicle. I mean, it's just the imagination is.
I can't imagine. Do you have any idea if it is more the insured, or is it like providers that are utilizing some of these services? You know, there's been several, I think at the federal level, stings where, you know, you had providers that were actually elevating their costs and things like that. Are we haven't seen that here?
We had a crisis on health insurance companies when they were all under the ACA. And agents switching their consumers from one insurance company to the other so they could collect their fee. But the federal government had no authority to control the licenses. We do. And so we asked the federal government, give us, you know, and so that's why one of the impetus for Georgia Access is that we will run the marketplace and we will identify, we use computers, we use a lot of data analytics to identify, for example, an agent that is switching people multiple times. We see those trends and then we go and ask our agent, show us the proof that the customer authorized you to do all these switches. And we're taking licenses away. We're putting people in jail. That's one of the issues that because we have the authority. We have a lot more authorities than actually the federal government does when it comes to policing this.
Chairman Dolan.
Yeah, I'll be brief. Thank you. So I know you answered a question about direct action and you haven't seen the results yet. But what are you able to do to hold insurance companies now accountable for people who don't hire an attorney? I think before there was data to show that, you know, claims were paid more often with an attorney. And I think that's probably true. I mean, they can. So if now that tort reform has passed, what are you doing to help consumers not having to hire an attorney?
We are going, not only publicizing, but going across the state of Georgia and encouraging people to file complaints with us. We are their advocates. And we can, you know, we want companies, if you sell a policy and you have a claim, you pay the policy. This is what I'm telling insurance companies. If you pay the policy within 30 to 60 days from the claim, your complaints go down to almost zero. When you start jerking companies, you know, customers around and dragging out a claim and not, you know, that's when we have, and then we will intervene. And they have to show us their books. They have to show us their internal messages because we hold their license. So we have incredible authority. Authorities that not even lawyers could get access to on looking for records. And so that's why we have 11,000 complaints and we're investigating them.
Majority Whip.
Last one. You talked about showing the books. What do they have to show you? Do they show you the company's overall profit? If they have any affiliates or subsidiaries that work for the company, do they have to show
Any
you
activity that goes on in Georgia that this companies, they have.
So
When we do a market conduct, we look at everything. That's why these market conduct examinations take so long, like the healthcare, you know, the mental health parity. It took us, I think it was 18 months. We go back and forth. And if they don't show us a record, we ask for the record. If they don't, we're going to say, you know, not providing the record on a timely basis will increase the number of sanctions.
So they show you, so if it's, let's just say ABC Corporation is an insurance company in Georgia, they have to show you their bottom line.
They got to show us the product, how they structure it, how is it going to, what is the coverage? Are they going to make any money out of this product? And then, of course, the losses. It's we have a tremendous team, and Steve Manders can go more into the weeds. He's been at this for 34 years. They show the amount of information a lot of times the only restriction that I have is the amount of staff that we can put against these examinations. Remember, these products come in with 1,500, 2,000 plus, using AI to produce the product, and we have to go through it manually to make sure that there's nothing in there that's going to be contrary to the rules in Georgia.
And that mechanism is for you to be able to determine whether or not they need a raise in their rates.
I can only say they can have the raise or not based on the restrictions that the legislature has given our office to judge by. It's not whether it's fair or not. That's not, you all have never given me, and I will tell you as a conservative, I would be hesitant to say that let one commissioner, this is how we got cross-eyed with previous commissioners. I'm humble enough, and I'm married to a policewoman that keeps me from doing stupid stuff, because you probably never find my body if I did. And so, but you can see how attractive this authority could be in the hands of the wrong person.
Two more brief questions. The first from Governor's Floor Leader Sue Hong.
And just to follow up on Whip or Chet's line of questioning, so they have to show you the losses as well. So would you say that the insurance companies who have been operating here in Georgia have continuously been showing losses?
In
And that's
certain
what they're
lines.
justifying the rate increase?
Only in certain lines. Like, for example, commercial auto. They've been taking losses for about 10 years.
For how long? I'm sorry.
About 10 years. And so that's why ultimately they say this is not sustainable, and we're pulling out our coverage.
Next issue, you're going to speak on an important bill in a minute. Representative Derek McCollum, last question.
Thank you, Mr. Chairman. Thank you for being here. I got a couple of quick questions. So I was apprehensive about tort reform, but my constituents called me by the hundreds. And, it's crazy. They distrust the insurance companies more than they do trial lawyers. So that's saying something. My question is from all the responses I got, the $0 claims, my constituents just keep saying, I'll call the insurance company, a limb falls on my house, and I'll call and ask them, we won't turn it in. But then when they go to renew, the insurance company will either go up on the rate or cancel them because they say they have a claim. And they're like, what are you talking about? Well, we show here you have a claim, but it was $0. So they're gaming the system by doing this. And I'm telling you, I've had tons of my constituents call me concerned about that. That's one question. And then as far as fraud goes, do you think that a lot of the fraud is in roofing? And if that's the case, do you feel like we need to license roofers? We have plumbers, electricians, contractors, everybody's licensed in Georgia. Do you think that would be something that would be good? Those two things are top of mind, for my constituents.
I will tell you your first question. Please encourage those constituents to call us. I'm looking forward to if I can find a company that's doing that with charging an additional counting it as a claim when there was not a claim, it's just a call, say, hey, I'm looking for an opportunity to thump insurance companies if they do that.
Wow.
But I need the complaint.
My thing is I literally have agents say, tell the consumers, call us first. Don't call the insurance company because they are doing this. Our agents are telling me that they're doing it.
Call me.
Well, I mean, could we not just fix it? Just say you can't do this.
But there has to be an accountability process. And the accountability process is the authority of this office. We have incredible authority. If people, and this is what I want to encourage people to use the power of this office to make things right with insurance companies. I think we can pass legislation. Don't get me wrong. I think but let our office engage, because we were able to correct some companies' behavior in 24 hours when they published that they weren't going to cover properties if the roofs were 10 years old less. We were able to change that in 24 hours. That beats any level of it. Now, The second question you asked, sorry, I lost track of.
I was asking, do you?
All right. All right, Representative McCollum, I'm hearing that Steve Manders is going to be able to answer a lot of
Yeah.
questions on constituent service and Governor Brian Kemp's floor leader Sue Hong did have one follow-up question.
Yes.
Going up to my last question, Commissioner, so, because I'm very curious about the data and the losses, et cetera. So, do you know how the losses that the companies are showing in our state compared to the losses that they're showing in other states, and what the ratio is as far as the increase in premiums from us versus the other states?
We have a very good relationship. Not only I'm a member of the NAIC, but we have an incredible relationship with the Southeast Commissioners. We see the world very much alike. We compare notes constantly. And so we have a good picture of what's worked in other states and when we see that a company is doing something in one state, the rest of us talk to that companies, don't even try doing that in Georgia. And so we have a very, I'll have to run the numbers down for you to give you that exact, but we have a very good picture because our authority, we can share information with other regulators that we're not allowed to share with other entities, even state government.
Yeah, we would like to see that data just to see how that's compared. And I don't know if it's going to be on the thing, but.
Well, Steve, I think Steve will be able to go into details of how we share data across it and what are the restrictions on the use of that data.
Commissioner King, thank you for your military leadership, for your service in the city of Atlanta, as well as chief in Doraville. That's where I met you. You did a great job there. You brought integrity to the insurance department. You've shed a lot of light, and more importantly than that, you've offered your department, Mr. Manders and others, to follow up on that in your absence today in the next 4 meetings. But thank you for your engagement. Again, if there are things in the code you need from us, let us know, and we'll get to work on the legislation. We appreciate your work on the regulatory front. Let's let Commissioner King know how much we appreciate him coming today.
Thank you. Thank you, Mr. Turner.
All right, here, that was a lot longer and more in depth than we anticipated, but that's good. This is a difficult problem, and we are digging deep to find solutions. I think that shed a lot of light on multiple things to do. Here's what we're going to do. If you need to take a break, you're welcome to step out individually. We're going to go through and try to get closed here during the noon hour today. And so here's what we're going to do now. We have Mr. Manders, we're going to hear from a little bit later. We're going to let some other speakers come and go. We've got Donald Cronin and Representative Derek McCollum to talk about some legislation that was passed this year and that has been implemented, which is having a positive effect. So Representative McCollum, I'll let you choose whether you'll go first or Mr. Cronin, but tell us about that legislation.
Thank you, Mr. Chairman. I just wanted to, thank you for having me here. I just wanted to highlight, something that actual, Donald Cronin brought to me, HB 422. It was a state employee health insurance. It's for high deductible. And I'll let Donald talk about it more in depth because he's obviously more knowledgeable about it. But it was just a great piece of legislation, for our state employees. It's going to save the state a lot of money through FICA tax. We don't even know the number that it'll be because of how much it'll save until we get it fully implemented. But Donald obviously can speak of it, and it's going to be great for the employees as far as being able to save money. Instead of using a 401k, you can use this, and you don't have to have mandatory payouts after 72. And so I'll let Donald just kind of fill everybody in on the legislation. And I want to thank him for the idea, and I just kind of carried it for him.
Thank you for your leadership on that. Mr. Cronin, the HR Director of the Capitol.
Good morning. So I'm here to talk about HB 422. Everybody voted for it on the committee except one person who was absent. How are you doing, sir? You doing well today? It only deals with a very finite area. It's health savings accounts and high deductible health plans for state employees. Subject matter is very small, but the impact may be very great, as explained momentarily. So signed into law May 14, 2025. It becomes effective no later than January 1. And this is a good example of government creating a marketplace for a lower premium insurance product through tax incentives, the government being the federal government. High deductible health plans, best way to understand them is it essentially pushes the upfront cost of medical care from the health insurer employer to the insured employee through the use of high deductibles. So in essence, the employee is his or her own insurance company until that high deductible is met, at which point the insurance product resembles a traditional insurance plan with the typical cost sharing that you are used to in a traditional health insurance plan. This sounds horrible. Who would want this? You can have the safety and comfort of the traditional health insurance plan, or you can be your own health insurer. It's two main reasons. Number one, the cost savings, which can be significant, lower monthly premium. By way of example, if a state employee has the most expensive traditional family plan and they move to the family version of the high deductible health plan, they will save over $4,100 in premiums over the course of a year. The other reason is it gives you the ability to enjoy incomparable tax benefits through the use of a health savings account. Savings account, you need a high deductible health plan to contribute to a health savings account. It's not like a 401k. Any employee can contribute. No, not with a health savings account. You need a high deductible health plan. The name is a bit of a misnomer. It's actually a health investment account. All these HSA banks have insurance vehicle or investment vehicles that would replicate what's in a 401k plan. You can use it as a savings account. You can park your money in a money market, for example, but you would not be getting the benefit of it for reasons that will become apparent. And the portion of the employee's paycheck that goes into the HSA completely avoids taxation. Completely. You're laundering your money effectively. So what are the benefits? So when you contribute pre-tax through payroll, through your employer, not only are you avoiding the income tax, you're avoiding the federal payroll tax, which is a shared tax between employer and employee at 15.3%. The employee is responsible for 7.65%. The employer is responsible for 7.65%. So and it breaks down 6.2% Social Security, 1.45 for Medicare. So most people don't know they're paying that because most people don't look at their pay stubs anymore with direct deposit. But every dollar you're making, 7.65 cents is coming out. This allows you to avoid that. Kidneys within the health savings account grow tax-free. That's why I mentioned it'd be a mistake to treat this as a savings account because all those gains through those investments you make are not taxed. And when you take the money out to reimburse a eligible medical expense, tax-free, no tax implications whatsoever. Now that sounds good in the abstract. It really sounds good when you compare it to a pre-tax 401k, which is the paradigmatic investment vehicle for employees, not only in this state, but throughout the country since the mid-80s. So if you compare an $8,000 pre-tax contribution via payroll to a health savings account, it's not subject to income taxation and avoids $602 in payroll taxes. 401k pre-tax, you don't pay income tax on it, but you're paying that $612 in payroll tax. So you're already $612 ahead of the game. You're better off with the HSA than a 401k. You can withdraw the money anytime you have a reimbursable expense. You put money in January 1, you go to the doctor January 2nd, you can take money out. 401k, you have to be 59.5, or you pay a 10% penalty. And then when you take the money out, that's the big difference from an HSA. If you take money out, for example, $2,000 to reimburse a qualified medical expense, no tax. By way of comparison, $2,000 from a 401k, you're paying the income tax then in effect. All you're doing is deferring the inevitable, and you may defer yourself into a worse tax rate. So with 401k, you're just kicking the can down the road, delaying the inevitable. HSA, you're laundering your money from taxation. Tax incentives for employers. You don't need to incentivize an employer offering a high deductible health plan. They save a lot of money. They have their own incentive. But you do need to incentivize employers offering the ability to contribute to a health savings account via payroll. And the tax incentive Congress gave the employers is they get to avoid the payroll tax too, because it's a shared obligation. For every dollar that's put into the HSA via payroll, not only does the employee avoid that tax, so does the employer. So in the $8,000 example, both the employer and the employee are saving $602 in taxes. Additionally, some employers will contribute money to the health savings account of the employee that is deductible as a business expense. We can't enjoy that. We don't pay income. There's no expense to deduct income from, but nonetheless, that is how they have incentivized that. So House Bill 422, what does it do? Well, currently, state employees can get a high deductible health plan. And as a result, they can open up a health savings account. What they can't do is they can't make pre-tax payroll contributions. So what that means is they'll just have to write a check from their checking account, funded like you would a brokerage account. Problem with that is, although you can deduct that from your income on your tax return, there's no way to claw back that payroll tax that you paid that you would not have paid if that had been done via payroll. And additionally, the state is paying payroll taxes that it would be avoiding if those state employees were contributing pre-tax via payroll. So the future January 1st, what you did was state employees will be able to make pre-tax contributions to their health savings account, which means both the state and state employees will be able to enjoy the full benefits, full tax benefits of high deductible health plans and HSAs. So I have an example here. Assume $2 million is contributed pre-tax by state employees. That means the state saves $153,000 in payroll tax. Now 2 million is only 250 employees contributing 8,000. So if you say 10 million, you're talking about $750,000 of payroll tax saved that otherwise would go up to Washington. And it's actually double because those employees collectively save that same amount. So all that money stays in Georgia. And because HSAs are more attractive now, the high deductible health plan is more attractive, which means in theory, we should have more state employees in this lowest cost health insurance plan offered by the state. So that's what you did by voting for HB 422. If you have any questions, I'd be pleased to answer any questions.
Thank you, Mr. Cronin. And I would like to point out this success story you're seeing here in state government, cities, counties, school boards, governmental entities, private employers can replicate this, and a lot of them are already using it. So
just one
thank
point
you.
about school boards. Some school districts do not pay Social Security. They've opted out. So their payroll taxes would be much less than the 7.65. It'd be the 1.45. So they're less incentivized than a typical governmental employer or private sector employer. So we have kind of a mixed mash throughout the state of school districts. Some have Social Security, some don't. So, but you're right. The ones that definitely are like us has the incentive, and many school districts already have this. This just put this us at parity with the school districts.
Representative Al Williams.
Thank you, Mr. Chairman, and thank you, Ms. Cronin. I was going to come by your office to see you when I left today. I like the concept. I think there's a good effort here. My question digs a little deeper. The state is not known for its over generous payroll except for certain positions. And when we look at people who are down the left, who don't pay much income tax because they don't make much income, and they kind of locked. They can't take advantage of this most of the time. It sounds good, looks good, but I'm on a high deductible. And believe me, I say ouch when I go see my doctor and I pay almost $500 co-payment. And you know, how do they get a benefit that are not anywhere near the six figures? Matter of fact, 50 and below. 3 kids at home, kid in college.
Well, you could always fund their accounts, give them a head start if you wanted to.
I think you missed what I was saying. I agree with you. I know the concept, but it's hard to fund what you ain't got when you net your check and you got to go to Kroger, drugstore, and a few other places, there is not a lot of net. We have a lot of administrative assistance here. It's
Right.
tough to say they got enough to save any more than the little they save.
This benefits the taxpayers. I know that because we will be saving payroll tax we otherwise would not be. So we work for the taxpayers first and foremost. So they're the winners here. Not everybody can or will take advantage of it. I'm not sure I'll take advantage of it. It's not right for everybody because of income potentially or health situations, but the taxpayers win. So that's why you all voted for it.
Thank you, Mr. Cronin, and thank you, Representative McCollum, for bringing this bill and getting it implemented, and appreciate the leadership on this. This puts more cash into the healthcare system for our doctors and hospitals and healthcare providers. So thank you all. We now have renowned Georgia State insurance professor Harold Weston. Professor Weston, please come up, and while he's making his way up, we will let the committee introduce themselves in a little while, but three people who are joining us virtually are Representatives Emery Donahue, Todd Jones, and Noel Williams. I did want to acknowledge them, and we'll get everybody introduced once we get through Professor Weston's remarks. Thank you for coming down the street from Georgia State.
Yes, I could park at my usual parking lot to come here. Thank you. I'm glad to be here. Calling me renowned, maybe the first time I've heard that, so I'll come back more often. You had a lot of time with the commissioner, and so I don't want to repeat things, nor do you all want me to give the introductory lecture on insurance that I've been doing the first week of classes. So let me just try and make a few points that I think will fit in, and I've talked with Mr. Manders where it may be useful because I think he's got the more important information for you. And then, of course, take questions. One thing that I think we should bear in mind about insurance is this is probably the only business where the business does not know what the cost of goods sold is until long after they have delivered the product. Every other business, you buy a refrigerator, you buy a car, whatever it is, the manufacturer knows what it costs to make. And they know what their profit is or their loss if they choose to undersell. And they may decide to undersell some particular product in the nature of, we'll have more later on from some other area. Insurance is the only business that I can think of. We don't know what that cost is until 3 or 5 years later, after the claim is made. And so we do it by projection of what the past losses were, and we look at what the trends were and think that's what the cost should be when we sell this policy this year. But things change. And if we haven't properly estimated or been allowed to get the right price, we're going to be operating at a loss. Now, there's lots of money. This is capital. This is what makes companies stable. And this is why rates need to be adequate and not excessive. But when an insurer, talking about tort reform here, issues a $25,000 minimum limits auto policy and winds up paying $25,000 and winds up paying $25 million on that, they didn't get premium for $25 million. Now, did they screw up the claims handling? Sure, that happens, and that's their cost for screwing up. Let's acknowledge that part. But if it was a gamesmanship, and whether you want to call it fraud or the other things that go on, they were expecting a $25,000 loss, not a $25 million loss. And we've seen the news stories of some such claims that have hit that way. So I tell you that because as losses accelerate in some areas, the premium will lag until we get to that point. And even if we know this year these are going to be big losses, really, we're not going to pay most of them for a year or two. At year 2 or 3, the actuaries will have enough information to say the premium ought to go here. And then you got to go to the commissioner's office, and he's going to fight you on it, and probably rightly. But really, it's going to be 3 years is the conventional wisdom until we see whether the rates will be adequate for those losses. So I think that's one of the few things I would try and add to your understanding of insurance. There's lots of other things I could talk about, but I'd rather make sure Mr. Manders has his time, and the commissioners had a lot to say. So if that's helpful, let me leave it there, and I'll take whatever questions you might have.
Any questions for Professor Weston?
Mr. Chairman, to the renowned professor.
I'm going to take that back to my class and tell them they need what I was called today.
If they'll intern here on the committee, we'll call you that the whole semester.
Right.
So speak to us a little bit more about, you said the rates have to be adequate but not excessive.
Yes.
And so how does the state find that sweet spot?
Sure. So it's in the statute of all states. And this goes back decades, if not 100 years, that rates must be adequate, not excessive, and not unfairly discriminatory. Sounds right, hard to implement, policy decision on that. In terms of adequacy, you want to make sure that the insurers will have enough money in the future to pay those claims. Some years the losses will not be so high. Other years they will be higher, but over a rolling period, you would hope that they've got the rate to pay for that. In terms of not excessive, this is a highly regulated industry. The commissioner was addressing that for an hour today. And so they should not be excessive. And this is one where consumers have a difficult time understanding how this business works. In terms of what's unfairly discriminatory, that's often a policy decision. I don't think that's an issue we have to talk about here today, but we can. But in terms of getting to what's adequate, Mr. Manders will be able to explain better, I think, what would be a typical expected rate of return on your operations. And the commissioner explained that if you're losing money on your line of business, commercial auto, eventually you get tired of losing money on that. Investments will help. I mean, you got this money coming in, depending upon the size of your company, $8 billion, $60 billion flowing through nationwide, not just out of the state. And that is supposed to be invested, but as you all know in the statutes, the most they can do for a property casualty is 30% in the stock market. And many companies are actually lower on their investments. Now, there's a whole lot of holding company stuff that go on. We can address that. But investments are not, even when we listen to Warren Buffett, that's a whole different operation. They cannot, I've looked at the financial statements of companies, P&C companies. It's limited by statute. Does that address some of your question? Okay.
Thank you.
Chair Williams.
Thank you, Mr. Chairman. Just a quick question.
Oh, that's always
I
a
was in
danger.
this business 20 years ago, so I've been on a long time. But back in the day, as the young kids say, there was games being played by some of the insurance companies on incurred but not reported. The line item, incurred but not reported claims, meaning that it could be it's an occurrence-based policy and general liability, for example, the claim didn't come in until after the policy expired or whatever. But are insurance companies still artificially manipulating that sometimes?
I can't answer that because I don't know, but I can give a more general answer if that would be helpful to you. IBNR, incurred but not reported, are supposed to be an estimate that actuaries will attest to, if I remember the regulations correctly, as to what they estimate these additional losses will be that we've not yet heard about. So they've been incurred, the policyholder, but they've not yet been reported to the insurer. Now, it could be a lag of just a few days, maybe a month. It could be they really don't know that they've had a loss until there's a lawsuit that hits them years later. When we're talking about an estimate, there's always the opportunity to push it up or down within those bounds.
And that might be something that Mr. Manners might be able to address just from the Georgia Department of Insurance's study of the matter. So, thank you.
Sure. These are always estimates, and if they're not accurate, they need to be fixed.
A long time ago, that certain carriers would artificially increase their IBNR, and over a period of time, it never did develop to that degree, and they were using it to basically justify higher rates than they actually needed.
Sure. And that goes to the reserves. And sometimes they were over-reserved. And then new types of claims come in, such as long-term tort claims that were not expected at all and will find themselves in need of much greater reserves. So yes, there's opportunities there.
This means Chair Shaw Blackman.
Thank you, Chairman. It may not be the best question for you, Professor, but I just wanted to ask you, I know Steve may have some of the answer here, but I mean, we're long-term believers in the agents and what they can do for you. Is there any differentiator there that, you know, any data, or is there anything worth mentioning when an agent's involved versus not, that you're aware of, or any trends or any?
So I can't answer for data, but I can say this sort of thing. Many people I know in the industry, because I've been involved with it, hate commercials that say only pay for what you need. The consumer doesn't understand insurance. They don't know what they need. As the commissioner said, they're probably underinsured on a lot of things that they probably need coverage for. If an agent is only competing on price, the consumer probably will not be much better off. They're just getting another cheap policy. If the agent, broker, we have interchangeable words for different reasons, you guys understand the difference, is actually doing his or her job well to say, here are the coverages we recommend for you. And this is a price, or you can skip them and get less. You would hope the consumer understands that they've bought less and they've paid less. As the commissioner said, the education of the consumer, and that's hard. Prices are high. I'm a consumer. I see everything going up. Is that? Yes. Yeah.
House Insurance Chair Eddie Lumps.
On what insurance actually is. Is it a service or is it a commodity?
Oh, so I have an hour to lecture on this. Thank you. Of definitions of insurance. And really, if I knew that question was coming, I would have pulled up quite a bit of presentation for you. It is like any type of financial service. We call it a product. I'm not sure product is the right word for any of this. I think it's a strange business. Fascinating, but strange. For one thing, there are 2 points I want to make. The idea of insurance is to indemnify the policyholder. So if my property is damaged, my home is damaged, I want insurance to pay to rebuild that and to fix it. And we have some issues, whether it should be actual cash value or replacement cost, but the idea is to make me whole and get me back into a house. If I cause a loss by my negligence, I'm liable for that, and I want insurance to indemnify me, specifically to pay on my behalf to the injured party. And so indemnity is the whole crucial point of this, whether we call it a product or a service. Another point I want to make on this, insurance is not only has the problem of we don't know the cost of goods sold until years later. It's the only thing that the consumer, business or otherwise, sends us money, sends the insurer money, and the insurer gives them nothing back. I go spend $10,000, $20,000, I get a car, or a refrigerator, or a roofer, or some service. I send my money and I just paid my premium today. And I got acknowledgement of payment, and here's a lot of papers. But that's the deal. It's a contract which is a promise for a contingent event to pay in case of that contingency. And so consumers are frustrated because they look at, what's all this paper? What did I get? It's hard to make sense of that.
Professor Weston, I've got two questions. The speaker's scope and mission to us is examine rate setting practices, profit margins, claims processing, regulatory compliance to make sure that premiums are not too high. We've heard today, and I hear often, that insurance companies make money from investments. And then you hear, well, whether they're making money or not is based on their losses and their claims and their underwriting. Can you shed light on the committee as we're starting this analysis about what is the relationship between investments and, I mean, is this just a hedge fund paying a claim, or how are the claims? What are the variables that do impact rates and premiums for, particularly on car insurance, homeowners, small business insurance, things like that?
Sure.
And then the second question is, what went on in Florida? You know, I've heard some people say you had this affiliated entity, shell game type stuff that we don't have an equivalent of in Georgia. Should we be looking at what they did in Florida on insurance reform, or is it apples and oranges?
All right. So what are the approved rate factors for auto? This is what the department allows. And different states will vary on that. Miles driven, loss history. What's your driving history on this kind of thing? What type of car do you have? And I would also kiddingly say, if you see the news, if your 20-year-old is driving a Maserati, you know there's a loss coming. Students always ask, does the color red increase the price? No, I've asked underwriters, and the answer I always get is no, color does not affect it. Gender does in many states. California does not allow it. And so women are subsidizing for the bad driving of men, or vice versa, depending upon your perspective. So it's really what the state allows. And there, Mr. Manders will be able to probably speak better to that. I don't know the specifics on it. In terms of what happened in Florida, I really try not to pay much attention in Florida. It always kind of scares me when I see the insurance issues there. But one of the big things there was assignment of benefits by roofers and contractors. And this is where roofers, which happens many places, would say, well, I was in the neighborhood doing work, and it's just my business. I'm looking at roofs all the time, and you have some, would you like me to go up on the roof and see? And gosh, look at the damage you have. Maybe they caused it, maybe they found it, maybe it was old. And they go do the work and take an assignment without telling from the insurer, the policyholder, without telling the insurer who has an opportunity to inspect. That I know was one of the big issues there. I don't know the extent of that here.
Thank you. Governor's Floor Leader Suhan.
Thank you, Professor. My question actually was similar to Chairman Reeves' question, and I'm not sure if you answered it. So what do the insurance companies look at in setting premiums? Are they looking at profits and losses from investments as well as the claims and et cetera? What's the data that they're looking at in order to set the future estimated premiums?
Sure, I think, and I realize I didn't finish that, your third question there, so let me put that together. Two things can be true at the same time, which is to say companies will make money on investments, as would any major corporation that's moving billions of dollars through. They're not just keeping it in a checking account. Insurers, for what they do for reserves, paying for losses, those are in short-term investments. They're not making much money on there. You're probably getting a better rate than I am on the money market, but that's not where the investments are. The others are what you do with excess cash flow. And so, yes, companies will be investing in that. Again, you've heard Commissioner King say real estate would be one, although that's limited for companies because of what are considered admitted assets under statutory accounting. Equities, I've said, are limited to 30% for a property casualty company, 10% for a life, health, and disability company. And of course, if interest rates are high and you're invested in long-term bonds, you have a better rate of return. Interest rates drop, you have a capital gain. And when they flip the other way, as they did some years ago, from near zero to 4 or 5%, you have a major capital loss. So all of these things affect what the investment rate of return is. In terms of what the premiums are, and I hope my answer is correct, and I'll defer to the commissioner's office to give you better answers. Look, companies need to operate their business at a profit. And when we do that, we look at what's called the combined ratio. The combined ratio is a standard metric you'll find in all of the financial statements of insurers that combines the loss ratio and the expense ratio. The expense ratio for insurers is typically about 0.30, 30%. Some companies will be lower, some will be a little higher, but that's kind of your target area. So if you add that, and that expense is all the payroll, all the CEO bonuses, your overhead, your administrative costs, paying commissions to get the business on the books, and you add that to the loss ratio, which is the actual losses paid and we are expecting to pay, and the expenses that we expect to pay, you hope that that number is under 100.
Under 100?
100%. Because if it is, you're making money. And if you have a combined ratio of, say, 0.92, you have about an 8% return on your operations. You can still make 5, 7, 10% on your investments on top of that. But at least you know that what you're actually selling, you're making money on. If your combined ratio is above 100, we're paying more losses than we're earning in premium. And at some point, the money's going to run out, or the patients will run out.
Sorry, if I can. So just to clarify, so does the loss ratio include profit or losses from investments?
No.
Okay. And does expense ratio include marketing
Yes.
as well? Okay.
Including commissions. And so companies will either have direct marketing, the advertisings that we see, or what they pay to brokers, for which there's probably less marketing going on.
Okay.
I should say less marketing to the consumer. Big businesses are not watching TV to decide what company to go with.
Thank you.
Chairman Gollett.
Thank you. Being an astute professor, I appreciate you being here. Knowing the market here in Georgia, do you have one item that you would say, hey, our goal here is to help our consumers and our consumers and constituents of ours make sure that they get the best rate possible on their insurance? What would you recommend, like maybe one item that we should look at and dig into to address that, just as a whole, not necessarily auto or home or commercial, just, you know, from what you've seen and what you've studied?
Question. I don't have an immediate answer for you. I will tell you, I listened to the commissioner's remarks earlier, and the fact that he's willing to go after companies who have unjustified rate increases or are acting against the regulations against consumers. The commissioner should be dealing with that. But I didn't come prepared with one solution. I'll probably give you a lot of them if I thought about it, but you want one.
You want to go ahead, Fred?
Mr. Chairman, sir, my question is one I've asked in the insurance committee before. Is there, with the improvements in technology, greater ability to identify those who are more at risk rather than just broad characterizations as to what will and won't be covered? Folks who are egregious in their driving, their premiums are going to be higher maybe than some, or where there's greater risk that can be quantified in some way through use of technology now as we have these advancements in maybe analyzing the risk that's associated. Is that available, and could that be a means by which to provide savings to consumers who are acting responsibly and therefore claims less likely?
Yes, yes, and yes. There is technology and there's more coming online. There's also strengthening building codes if we're talking about homeowners. So if you actually build to what we call fortified or resilient standards, your home is less likely to be damaged. Florida has great building codes. For construction, the showers and toilets tend to break early, but the buildings are very solid, and Alabama has done this too. And so if you build a house that can withstand severe weather up to a certain point, you're not going to have a loss. Telematics, what we have in autos, helps insurers understand driving behavior. The challenge, I think, with that is how much of that driving behavior is legitimate interpretation? How much will the department approve as risk factors in rating? And my own personal objection to it is they look at, are you accelerating hard? Are you braking hard? Are you above the speed limit by certain amounts? I wish they would be able to see that the driver in the car next to me is holding on to his phone and swerving. And the reason I'm now doing 80 is to get away from him before he slams into me. And I want his rate to go up and not mine. Because context is important. So there is some technology. In terms of fraud, my understanding, I don't have direct knowledge, is that AI is probably going to be really helpful to detect fraud much better than what we could do now. But risk factors, here's the other problem you're going to have. When you really get to slicing very thinly on higher risks versus lower risks, you eliminate the rating bands, and now it becomes individual pricing. And if you get to individual pricing, some people are going to pay way more, and perhaps they should. And at some point, you all may say that's unfair to some folks, and you have to squeeze that down. So it becomes a policy question as to how far the actuaries can slice those rates.
Democratic leader Beans.
Thank you, Mr. Chairman. You mentioned assignment of benefits.
Yes.
But you didn't complete the cycle on assignment of benefits because it appears that if the roofer comes and says, I'll take care of your insurance business for you, and if the company doesn't pay, then they're going to put a lien on your house.
Well, that can happen. My understanding of Florida is that assignment of benefits would include a bad faith claim, that the insurer has not paid for this damage, and therefore it's insurance bad faith. That's my understanding of what happened in Florida.
What, here in Georgia, if they do that, and because they're going to make you sign to say that if the insurance doesn't pay, I'm on the hook for it. So that was just my thing. My antenna went up a little bit.
Sure, and that's an important part. And I know in Georgia, because long ago I did some real estate law, mechanics liens will be filed real fast.
This is my real question. From your analysis of the marketplace, what state has the best marketplace when you say that the rate should be adequate but not excessive? What state has this right?
I don't have that information.
Okay.
Insurance economists who study those kinds of things could address that. That's not my field.
Okay.
Jeremy Williams.
Mr. Chairman,
Williams.
I'm sorry, was it Williams?
Yeah.
Brother by a different mother. So to the majority leader's question about, are there any technology advances that can help insurance companies better identify good drivers and let them enjoy the corresponding rate decreases. Is that still the case with credit scoring? Is credit scoring does the correlation between better credit scores and better drivers still apply?
The last I saw, the answer is yes. Now, credit scores are actually for credit. Insurance scores are slightly different, but we
Like
tend to
Fair
think,
Isaac?
yeah, Fair Isaac.
So-
The last I saw is that they still show a correlation. I don't have any current
Including
information.
homeowners claims still.
That's my understanding.
And is it not true that some states, the legislatures have banned the use of that practice?
I believe that's correct. And there have been problems with that. Yes.
Yeah.
We know that oftentimes credit scores have been severely impacted by people's medical losses.
Correct. And on that note, is the insurance industry in the states that still use it, are they throwing out the medical claims out of the credit scoring process?
To my knowledge, a number of states, maybe more than that, disallow a credit score that's been impacted by a medical loss.
But you don't know what Georgia's posture is.
I don't know that.
Thank you.
Thank you, Mr. Chairman. I have taken copious notes. I found your testimony very interesting.
I sure would like you to be in my class and teach them to do that.
That's what I was hedging for. I need an A
Okay.
somewhere in my college experience. But my question is, it's kind of twofold. One's a question, one's a statement. But with your experience teaching the course and you studying insurance all over Georgia, if there was one thing you wanted the legislature to do, what would it be?
I couldn't answer that question before. I still don't have an answer for you.
Well,
To get back to you on that.
you're one of few people in Georgia that don't know what they'd make us do. But
You focus that on insurance. I got lots of other ideas for you.
you opened your testimony about the only product to purchase and you don't know what the cost is. And I take slight exception. After 47 years, marriage is another that you don't know for the first 2 or 3 years what the cost is.
All right. Thank you, Professor Weston. Appreciate your testimony. I will say, if you or your students see anything in the code in Georgia that's out of whack, that needs attention from the in-depth study y'all do of Georgia and other states, let us know. We welcome the expertise that you and your students at Georgia State put in the insurance field. So thanks for coming today. Appreciate it. All right, we are going to have a few witnesses before we get back to Mr. Manders and some in-depth witnesses. So let me call up Wendell Couch. Wendell Couch. Yes, right there at the podium. Thank you.
Thank you, Mr. Chairman.
Thank you.
I have spent the last 40 years running the largest mortgage company in Georgia. So regulations are something that we deal with every day. But staying before you is a victim of stupidity. I went to bed every night thinking my second home in Florida was covered by insurance. Never had an insurance claim my whole life. Raised 4 children, no wrecks, no house stuff. And I wrote my little $2,200 a year check thinking, oh boy, if something happens, I'm gonna be in good shape. I worked my whole life to be able to afford a home in Florida at Fishing Village. My good friend Emery Donahue, state representative, we fish every Tuesday. We grew up since 2nd grade. And he saw me live through the pain for the last 12 months of understanding why my insurance didn't pay. 2 days ago, an atomic bomb went off in Horseshoe Beach, Florida, called Hurricane Helene. If you were to look at YouTube, you'd be shocked at the devastation. I saw my friends down there literally in the streets crying. I saw insurance companies show up. I saw FEMA show up. Governor DeSantis showed up, and they were handing out little backpacks and $200 checks for people whose lives are destroyed by an insurance. disaster. So I got curious. So here's very interesting. The federal government sent armed guards to protect us against insurance adjusters. One approached me and said, if I inflate your claim and get away with it, will you pay me the difference? I said, wow. So the guard walked up and said, what are you doing here? I said, well, he said, get away. Armed guards, full combat with machine guns to protect us against insurance adjusters that wanted to cheat us out of work. I said, no, I'm going to file a claim with my insurance company. I was insured the year before when Hurricane Idalia hit, and Nature Coast Insurance had about $15,000 worth of damage. And I'm fortunate enough to be able to afford that, so I did the work myself. Didn't file a claim, terrified to file a claim. Didn't want to get canceled. Wanted to save my poker chip for something bigger, like a disaster. Stupid me. I noticed about 2 months after Idalia hit, which was a year before Helene hit, we're no longer insuring you. We have sold your policy to Slide Insurance. I said, okay, good. Got a notice from Slide Insurance saying we will review the premium in 90 days and let you know. I got a bill for $4,600 that I paid $2,200 for the year before, with a caveat that said, we're one of the few companies that will insure the Florida damages. We're solid, we're strong. We're here to put back the lives together of the Florida people. I live in Georgia. My family came here in 1852 and been here. I've been in the mortgage business 40 years. I've done and managed over 100,000 mortgage closings. So paperwork is very familiar to me. So I started doing some research just because I wanted to, and I found this out. The 5 major insurance companies have an average of $65 billion in the stock market. The average insurance company in the Florida and South Georgia paid on 62% of the claims. So if we lined up 10 people, let's chop 4 of you away and tell you you're not good enough to get the claim you paid for. I had the insurance company sent their adjuster. He valued my loss at $318,500. And I paid cash for everything. I was fortunate enough to do that. I worked my whole life to be able to do that. So I kept saying, great. Got a phone call. We've signed off on your claim. I thought, well, this is great. This is what this is for. And we'll let you know when the senior underwriter signs off. Got a call back and said, we'd like to offer you $486 for the $486 for the, said, for what? Saying, you stole my line. I said, for what? Well, a piece of loose tin on the roof. I said, you mean half of the house that the 235-mile-an-hour wind didn't blow off that fell in the ocean? And I lost all my fishing rods, all my tackle, my sofa, my washer, my dryer. Still don't know where it is. I got it. No telling where it is. Could be in Texas. I don't know. So I started doing the research and I wonder what these insurance companies really make. Well, I looked at the top CEO salaries, and the 5 insurance companies, none of the CEOs make less than $20 million a year. Slide Insurance, or a husband and wife organization, their cumulative salary without benefits, just salary, W-2 salary, was $56 million last year. Then I started digging in the back room, and whether it's true or not, but they had some of their claims adjusters who spilt the whistleblower saying, we got paid a bonus if we talk people into paying less claim. So where am I at right now? I have half a house in Horseshoe Beach, Florida. Representative Donahue wants to go fishing. And I said, well, be glad to take it. I don't know where we'll stay. I am 1 year and 2 days into a process. I hired an adjuster, had to sign a contract. He gets 25% of any claim I get. He went to the end of his rope, made offers to Slide Insurance, and they kept coming back with a no. So we secured an attorney who now gets 30% of whatever claim I get. And they came back and offered us $30,000. And I responded, well, add a 0 to that and we'll be in good shape. And they said, see you in court. So we have a court date for December 6th and just got a rebuttal back yesterday. Now, when I ask you to do a loan, you're signing 65 documents just to apply for a loan. Everyone here that's ever done a mortgage knows exactly what you signed, right? At closing, you're signing another 100 documents. And you read every one, and the attorney changed anything that you didn't like, right? So why am I required to sign the same thing and can't challenge anything in the hope, just in the hope that I don't need it? I've never had a claim. This is my first experience with an insurance claim. You know, it's very interesting when you can play the stock market with $65 million. It's pretty interesting that when I looked at the collected premiums versus the paid out, the cash flow was positive, more collected more than paid out. My new friend in the back said, it's kind of like a convenience store. They make 2 cents a gallon on gas, so you'll go in and buy the markup on the potato chips and stuff that they have to do. Well, where am I at? I'm going to be fine. I've got 2 pieces of dirt in Florida. I've got a house I've got to tear down. It's going to cost me $20,000 just to tear down because I'm in a code violation now. I'm being threatened to have a levy against me in my town because my house isn't torn down. Those are slogans. You're in good hands. We're here to serve. Let us put your life back together. Let us give you a t-shirt and a backpack and a bottle of water. But let a guy that's worked his whole life and put 4 kids through college and pay a premium of $4,600 a year and not have debt on something. So I was fortunate not to. Now I have nothing. I'm going to lose. I have no hope of getting any money. I don't know what's going to happen. I have no idea. You talk about why you get insurance. I just hope you don't need it. Some reason. So, Chairman, let me say this. I watched my friend Emery when we were fishing take calls from beauticians to get their license back where they forgot the thing. What you guys do as representatives, thank you so much. It's a thankless job. I told Emery he needs to go to the mental institution for even taking the job. But this is not against you. I know we want to fuss at you, but to have this forum to give us a chance and hope. But I'm a Georgian. I just had a place in Florida, but I bet you if you went to South Georgia today, this story is multiplied many times over. So am I a victim? No, sign the documents. I'm a victim of my own stupidity by trusting a industry and a process that would be there for me. You agents that are on the front line, it's just like when my loan officer screwed up on a loan, I took the heat. You agents are the warriors and the champions of in the insurance industry, but you put up with a lot. So Chairman, thank you for your time today and I appreciate the chance.
Thank you for coming to the Capitol, Mr. Couch. Omar Hall. Omar Hall.
Sorry for the long delay. I injured my leg last weekend, so just bear with me. But my name is Omar Hall. I'm in the insurance industry. I've been in an insurance industry for about 15 years. I started off, what actually got me interested in an insurance industry was my family was a victim of Hurricane Andrew in Florida. Since then, I've always wanted to get into insurance to be able to help those that don't understand policy and wanted to be able to really step forth and put my best foot forward for my community. So I started a career in the industry. I worked for major, large companies in which I didn't necessarily agree with some of the decisions and policy languages that were in there that protect the insurance companies from paying out certain claims. So I took my business elsewhere and I became a public adjuster. I am in the industry of helping homeowners understand their policy because, like many of you understand, there is 20, 30, 40 pages that people may not be aware of what they're signing for. So we fight insurance companies on behalf of the homeowners in order to be able to assist them. But our hands are tied. We try endlessly, day after day, to be able to try to help our homeowners, especially because there's a binding legal contract that indicates that they're supposed to indemnify their homeowner. However, I fight claims daily, and I have the proof here. course. When we try to help our homeowners or named insureds, we go to the policy because that's the legal binding agreement. But these insurance companies sometimes don't follow their policy. We have tried endlessly to enact something called an appraisal clause on their policy, which if both parties don't agree on a value of a claim, you can enact an appraisal clause, which will have independent parties go out there to write an estimate from your party, which is the named insured, and from the insurance company, and they will go out there to attempt to agree on a value. And if they don't, you guys could take your claim to an umpire and they will decide. I have endless proof here today with me that we have enacted those appraisal clauses, but these insurance companies are not in those words. We've tried endlessly to go to the Department of Insurance, which is the regulatory body, the government entity that regulates all insurance companies nationwide, to be able to ask for assistance and show them where they're actually operating in bad faith or unfair claims practice. Because all insurance adjusters are licensed. They have to be, including myself. So when we do that, it falls on deaf ears. We don't get a response back. We get a response back. It's more along the lines of, hey, the insurance company said they did this. We're in alignment with it. But at the same time, they're not following their policy. So the only recourse we have is to seek legal counsel, right? Then the homeowners are not put back in pre-loss condition because they're taking certain percentages, 33%, 20% from the claim. Homeowners are left in disarray. We can't help them put back in pre-loss condition if we don't have the assistance from the Department of Insurance or anyone else to be able to help keep these individuals in check. So we're at a loss. And again, I have documentation here to show you unfair claims practice. Every day we deal with this daily, but there's no recourse. There's nothing that we could do to be able to help assist our homeowners. So we look to you guys for assistance and our help.
And Mr. Hall, if you'll leave that, we're glad to look into it. I appreciate you coming here on that.
Thank you so much.
All right, Chairman Williamson.
This topic we requested, we specifically talk about Georgia claims here.
Yes. Georgia claims here.
There was a terrible story about the gentleman that testified from Florida, but I'm sure you mentioned nationwide regulation. There is no, to the best of my knowledge, there's no nationwide regulation of the insurance industry. And every state has its own regulatory environment. So you're saying the Georgia Department of Insurance has failed to, when your policyholders have asked the Georgia Department of Insurance to help, they have not helped.
Based on our interpretation of the policy, that's correct.
So, but you've got documentation, correspondence from the insurance company, from
Yes,
the
I do.
Georgia Insurance Department.
These are complaints that I have for an insurance policy that we actually filed a complaint for based on that appraisal clause, and they've closed out the claim.
Well, but so there was no assistance from the Georgia Department of Insurance.
Not in our favor, even though we did point out in their policy that they did not fulfill their duties.
Because that's the first, I'm not saying that I've never heard anyone say that Georgia Department of Insurance failed to respond and make sure that to your point, a policy is a contract. It's a promise to pay for these specific occurrences that are insured by the policy. I would encourage you to go back, because the commissioner was here earlier. I don't know if you had a chance to speak to him. Mr. Manners is here with the insurance department. I'm sure he'd be able to talk to you offline, but to the best of my understanding, they do try to weigh in and represent the best interests of the policyholders of the state of Georgia. So this is interesting testimony, because I have not heard of anybody in the predicament that all your policyholders seem to be in.
And thank you for bringing that, and we'll be glad to take a look at it.
Thank you for coming and presenting.
Thank you.
All right, thank you. I'd like to call Attorney Jason Branch.
Branch.
Good morning. I was going to say, I guess it's good afternoon, Mr. Chairman, and other distinguished members of this study committee. I appreciate your time this morning and the time that you've taken this morning. And I thank you for the opportunity to come before you and speak on behalf of the Georgia Trial Lawyers Association. For those who have not had an opportunity to meet, my name is Jason Branch. I'm an attorney who lives and practices in Columbus, Georgia, where I was born and raised. And I'm the immediate past president of GTLA. As reflected in this morning's agenda, this committee has begun to conduct a thorough examination of the insurance industry's rate-setting practices, profit margins, claims processing, and regulatory compliance to ensure that Georgia's businesses, citizens, and consumers are not being subjected to unjustified rate hikes. And I applaud this committee and the task that it has undertaken. What I'd like to do this morning or this afternoon is to share with this committee some of the research that we have conducted on behalf of GTLA, starting at the end of 2023's legislative session, and highlight some of the findings that we were able to find and discover that may be of particular concern and germane to the topics being examined and investigated by this committee. At the end of the 2023 legislative session, House Bill 1114 was enacted, and that was referred to as the Data Analysis for Tort Reform Act, which charged the Office of Insurance and Fire and Safety to perform an analysis on how the civil justice system impacts insurance premiums. Knowing that that was the question or questions of the day, GTLA immediately undertook to collect the relevant data so that it could be analyzed by independent subject matter experts in the industry to answer two primary questions. One, is there some sort of litigation crisis in the state of Georgia? And two, why are insurance premiums really on the rise? And is there any causal relationships between insurance premiums rising as they have and the civil justice system? The first step for us was to try to obtain the raw data to analyze. And unfortunately, this proved to be a difficult task. Specifically, despite repeated requests and formal open records requests, we were not able to obtain the data relied upon by the Department of Insurance and Fire and Safety, principally the data that is collected by the National Association of Insurance Commissioners, or NAIC, which Commissioner King referred to and referred to as the information that they use actually in their office to analyze things and makes decisions. So consequently, we had to spend significant resources to engage 3 experts to first mine that data and obtain that NAIC data from other sources in its original source. And then we enlisted the assistance of 2 of these experts to analyze the data once we obtained it, related insurance premiums and insurance coverage across various lines of insurance in the state of Georgia and other southern, southeastern states that we knew Governor Kemp was particularly interested in comparing Georgia to, those states being Alabama, Florida, South Carolina, North Carolina, Tennessee, and Texas. One of the experts was a gentleman by the name of David Stegall, who has over 44 years of insurance, reinsurance, bond, and risk management industry experience, and an individual who is highly regarded as a forensic insurance expert and testified in many cases across the country. Mr. Stegall issued a report titled Data Analysis for Tort Reform Act, Georgia Insurance Market Review. He also analyzed the House Bill 1114 data report and issued another report entitled Analysis of Insurance Commissioner King Report. And I believe everyone has been provided a copy of that report that has all of his data, and it's in the binder. I wanted to make sure that everybody, I know we gave a lot of people that report last year, but it's a new year and wanted to make sure that everybody has access to those reports that can be reviewed. Given the unique nature of medical malpractice insurance and the medical malpractice insurance industry, we also enlisted the assistance of Professor Bernard Black from Northwestern University, who has studied and written extensively on medical malpractice claims and liability reforms enacted in various states across the country. Professor Black collected and analyzed data regarding medical malpractice claims and payouts going back to the early 1990s in Georgia and compared them to our sister states that I mentioned earlier. He has issued a report, analysis of medical malpractice environment, and a copy of that report is also included in your binder. At this point, what I'd like to do is first just generally outline some of the overall conclusions of these reports, and then look at some of the particular data points in further detail that may be of interest to this committee in its efforts. In sum, the data revealed that there is no litigation crisis in the state of Georgia. The data provided by the insurance companies in the state of Georgia in response to the insurance commissioner's office show that the number of claims in Georgia is stable when adjusted for population. And I'll take an aside. There are certain aspects of the report issued from the insurance commissioner's office that failed to take into account important variables, principally inflation and change in population. In other words, if you're trying to determine whether the number of claims is really increasing in Georgia, you can't simply look at, do we have more claims in 2025 than we did in 1990, without accounting for the population growth and the number of increased people on the road, for example, who are driving around Atlanta and getting in more wrecks. You have to adjust for population to make that variable constant, and then you get an idea, are we really having more claims? Are we really having more wrecks? Population being controlled. Also, when you're analyzing payouts, it's important to account for inflation, because we all know that the cost of a Coca-Cola from the convenience store or movie theater in 1990 is different than it was or is now in 2025. So you got to keep that inflation cost constant, and then you can see are payouts increasing, decreasing, what have you. When adjusted for inflation, the data submitted by Georgia insurance companies showed that insurance companies are paying less in total payouts than they were in 2016. The data also revealed, was particularly with respect to medical malpractice, that there is no litigation crisis in that area as well. Specifically, the data reveals that the number of large paid claims, those being defined as greater than $50,000, against Georgia physicians has dropped significantly over the last 30 years when adjusted for population. The data revealed that the total payouts against Georgia physicians has dropped significantly over the last 30 years, adjusted for inflation. The data also revealed that premiums have fallen by 19% from 1990 to 2024 when adjusted for inflation. And while the premiums have decreased, they have not kept pace with the decrease in payouts or claims. And so that is a good thing for medical malpractice insurance carriers in the state, because they're allowed to make more money. The data also revealed that the number of physicians practicing in the state of Georgia has steadily and consistently increased over the last 30 years from 1990 to 2021. Now, going back and just picking a couple of these data points and diving in a little deeper, and try to be as brief as possible and not take up any more time than necessary. One of the questions is, why have premiums gone up? And is it, in our question last year was, is it related to litigation? And the data clearly supports, and I think we saw this last year, reveals that premiums have not increased dramatically as a result of any sort of litigation crisis or as a result of litigation or the tort system. And I think we saw that last year because that's where the conversation began. We're going to do this and premiums are coming down. We're going to do this and lower premiums. And then it quickly became, well, we're going to do it and we're going to stabilize premiums. And then it became, we're not even talking about premiums. We just need tort reform. And so there is not that direct causal relationship that you often hear amplified and used as propaganda. And I think, and I appreciate Commissioner King's report that he says insurance companies today are very reluctant to lower rates because of tort reform. And there's a reason, because they know that relationship is not there. And they know that there are a whole lot of other things driving up their premiums than tort litigation, and that's why they're very reluctant to lower it. What has the insurance company's own reporting indicated as results of why premiums are going up? One, inflation. Two is the increase in severity in frequency of large-scale natural disasters. And we've heard people talk about the dramatic impact of Helene, from the gentleman from Florida to, as he alluded to, all the people through South Georgia, all of the way through Middle Georgia, all the way up to Nashville, North Carolina. That has an impact on premiums. And then we also heard Commissioner King mention the higher cost of repairs. Technology's increased, equipment is increased. And when you have more expensive parts and equipment and cars and other things, that leads to higher costs, which leads to arguably higher premiums. Here's another thing that's interesting that the data revealed that I haven't heard anyone speak about today is a person in Georgia is twice as likely to be involved in a wreck than our neighboring states and twice as likely to be in a wreck than the national average. Based on the available data from the Georgia Department of Transportation databases and the respective databases of the Departments of Transportation from our sister states, the ones I mentioned earlier, Georgia has the highest total crash per capita since at least 2016 through the present. So again, a person is nearly twice as likely to get in a wreck here in Georgia as compared to our neighboring states or the nation as a whole. That is referenced in the letter that you have. There's a graph on page 4 that shows how Georgia compares to our sister states. I talked about underwriting and the difference between underwriting and investment income. This is an interesting fact when it comes to underwriting. Despite being the most profitable in terms of underwriting, we still have some of the highest premiums in Georgia. So what do I mean by that? In terms of an insurer's underwriting profit, meaning the profit an insurance company makes from collected premiums versus paid claims and operational expenses. And as the professor indicated, operational expenses can include CEO salary, bonuses. It can include Super Bowl marketing ads. It includes a lot. But you take in the money from your premiums and you subtract out all that you're paying for to run your business or market your business plus your losses, then that's profit or loss from underwriting. And what the data reveals is that Georgia insurers are on average the most profitable, which means they lose less than our neighboring states. And we're able to do that despite having twice the number of wrecks than our neighboring states. According to the data submitted to the NAIC, Georgia is among the highest states in terms of average premium for private passenger auto. That there are many states in this country, and there are many of our comparison states where the insurance companies in those states lose more money in underwriting or make less money in underwriting, yet still have lower premiums in those states as compared to Georgia. That certainly is a curious finding and one that you would not expect. You would expect the opposite. You would expect that we would have lower premiums because insurance companies lose less money in underwriting than they do in our neighboring states. Something worth investigating, and thank this committee for doing so. Another fact that the data reveals that we discovered was the number of claims has been consistent and payouts are decreasing. In HB 1114, the report generated the number of liability claims in Georgia submitted by insurance companies, referred to as record count in the report, between 2016 and 2023, shows that the number of claims has remained consistent over this period of time. And if you look at page 8 out of 10, there's the data and the graph showing that over that 7-year period, the number of claims, when adjusted for population, has remained fairly stable and consistent. At the same time, the data shows that the payments by insurance companies to citizens is decreasing overall and is significantly decreasing when those numbers are adjusted for inflation and population. Those are the graphs that you see on page 9 out of 10, especially from their high of 3 to 6 years ago. So again, if the number of claims is remaining fairly stable and consistent and the total payouts are decreasing, then one would expect to see insurance premiums go down rather than increase. Perhaps something that the data revealed that we've heard people allude to in their testimony earlier is that meritorious and valid claims are not being paid in Georgia without attorney representation. The tort reform analysis data shows that the majority of claims made by Georgians for private vehicles is for property loss only. Doesn't involve any personal injury. It's just damage to the vehicle itself. The data reveals that pure property damage claims are nearly 3 times less likely to be paid by the insurance companies. The data reveals that without legal representation, a Georgian is 70% more likely to have a claim denied, which demonstrates that without formal legal assistance, Georgians are not getting the insurance protection that they are paying their premiums for. Said another way, when an insurance company deals one-on-one with an individual citizen, much more likely than not, that person will have their claim denied and there will be no payout at all. This is a fact that certainly deserves attention in looking into how are insurance companies handling claims, and are they giving citizens of Georgia the coverage and protection that they deserve and that they're paying for year in and year out. Which again calls into question the claims handling process. That data is on page 10 of 10 of the letter that we submitted. Couple of final points. Market share. And according to the NAC data, Georgia, similar to every other state around us, has a top 10 set of insurers that subsume close to, if not the majority of the market, meaning that in most states, including Georgia, what you find as far as the market is most people are insured by a top 10 number of insurance companies, and that is typical for the market. In Georgia, from 2019 through the present day, Georgia has been one of, if not the most competitive business climates in private passenger auto and commercial auto with its respective top 10 insurers. I think Insurance Commissioner King noted that Georgia is a great place to do business, and we have a very competitive market. And I think the reason he says that he has a hard time being able to reverse the rates after they automatically increase them is because he cannot demonstrate that we don't have a competitive market. And maybe that can be looked into as to whether, as he said, are his arms tied too strong and too tight behind his back. But the point being, the market in Georgia has been very competitive. There's stability in the market. The main players are staying in Georgia. They're doing well. And where you have seen smaller insurance companies try to enter the market and then make a decision to leave because it did not work out for them, anytime a smaller insurance company leaves, they are replaced by other smaller insurance companies doing the same thing. And overall, the number of insurance companies and providers in the state has remained stable. So there's not this idea of there's a mass exodus of insurance companies leaving the Georgia market. They're staying and they're doing well. I'll skip the specifics about medical malpractice. We may talk about that at another meeting that more focuses on healthcare or healthcare issues. I'll end with this, and this has been alluded to. Lastly, the data revealed some eye-popping statistics when it comes to the profits being made by the property and casualty insurance industry. In looking at the average net income of the top 9 carriers in Georgia, that's State Farm, Progressive, Berkshire Hathaway, otherwise known as Geico, Allstate, USAA, Travelers, Liberty Mutual, Chubb, and Farmers. They enjoyed record-breaking profits in 2023, more than doubling their profits from 2022. And then those record-breaking profits were shattered again in 2024. And according to AM Best, property casualty insurers made $169 billion in profits in 2024, even as they raised prices and premiums and pushed legislative bodies for laws to avoid paying more claims. This is a 90% increase in profits from the previous record-breaking year, which was 2023. It is a 333% increase in profits from 2022. The net income in 2022 for property casualty insurance carriers, $44 billion. That was a good year. 2023, it doubled, more than doubled, $89 billion. And again, 2024, It almost doubled again to $169 billion. So the question clearly becomes, given the staggering increase in profits, why are insurance companies continuing to increase premiums, and why are they being allowed to increase premiums? One would expect and should expect that if the industry is raking in record-breaking profits, then premiums should be falling, not rising. Again, this is a brief overview, a quick overview. I hate to take too much time. I'll give you an idea of what's in that binder, some of the conclusions that the data has revealed from our studies. I appreciate this committee's time in allowing me to share some of those results with you. On behalf of GTLA, we appreciate this committee, every member of this committee, and the important work that this committee has set out to do. We look forward to continuing to be a resource as we are able to provide any additional information that we can and share more specific data and information at some of the future meetings that may focus on more specific areas. And again, I thank each and every one of you for your time today, but more importantly, I thank each and every one of you for your service to the state. As somebody said, it is a thankless job, and y'all do it well, and you do it with honor and respect and integrity, and I appreciate your time here this morning.
Thank you, Mr. Branch. One thing, you've given a notebook that says insurance data analysis. And, you know, one thing that Speaker of the House, John Burns, likes to say is let data drive policy. So thanks for putting data in our hands. The three members who are on Zoom will get you your notebook. Anybody who doesn't have it, they're right there. Thank you for coming. As I pointed out to Commissioner King, we got two books full of laws entitled 33, the Insurance Code, and you've got a lot of lawyers. Look that over. If there are things that other states are doing well when it comes to claims processing, regulatory compliance, other things for the benefit of 11 million Georgians, let us know.
Absolutely.
Thank you.
Thank you, Mr. Chairman.
All right, next witness, Trevor Davis. And Mr. Davis and other witnesses, we are going to start losing people about 1 o'clock, I think, and then we want to hear from Mr. Manders and be able to not only hear from him, bat and clean up, but ask him some questions. So hate to do this, but definitely have a good beginning and good ending and keep them close together. Appreciate you coming to the Capitol. We want to hear from you, but I do want to encourage a little bit more brevity from here on out. So thank you for coming. Look forward to hearing from you.
Understood. Thank you, Mr. Chairman. Thank you, members of the committee, members in the audience. I will endeavor to keep it brief. My name is Trevor Davis. My company is Enlight International. We provide software and professional services to insurance companies in the third-party administrators, self-insured employers in the property and casualty industry. We operate nationwide, and we have some perspective on reform efforts and change efforts that have been passed in other states. Today, I want to and want to speak specifically about what we think and how that will impact the Georgia legislation, Senate Bill 68 and 69, what we predict or what we think will happen going forward. One of our advantages of being a nationwide company and serving so many insurance carriers is that we have access to large aggregations of claims data, particularly for medical claims. Again, it's more on the medical side more than property casualty or home ownership. The data that we have so far is not yet developed from the Florida. I want to speak to Florida first. It's not yet developed from the Florida Tort Reform Act. I think that served as one of the templates for the Georgia activity. And that was passed in Florida in 2023. One of the highlights I want to talk about, I have a couple, not a notebook, but 2-page handout to share with the committee members, is that some of the key elements of that reform in Florida were comparative negligence, limited statute limitations, limitations on bad faith actions. But for us, being the examiners of medical claims, one of the most important elements was the limitation of what was so-called phantom damages, phantom medical damages. It limits the proper reimbursement for medical claims to actual amounts paid. That is one of the elements that Georgia chose to adopt in its legislation. We think that will have a profound effect. We personally, and as far as Enlight, we don't have sufficient claims data at this time for Florida since it's only been since 2023, we expect another year and a half or 2 years before that data is mature enough and normalized enough to make any meaningful predictions. We don't have it for, we do not, again, have it for Georgia since it was just the legislation was enacted in July. But what we have seen from our research for public sources, it's the Consumer Choice Center put together a survey of effects from the Florida industry impact of House Bill 837, their tort reform. One of the main elements that we saw is reduction in litigation volume, 40%. There's a reduction in exposure to bad faith claims of about 5%. There was a premium rate reduction, and I think the Commissioner King had mentioned that it's between 2% to 3% reduction in Florida. Too soon to tell for right now for what that would be in Georgia, but there was a premium rate reduction. And also in terms of the consumer and business impact, there was a reduction in the nuisance lawsuits. So again, in terms of being a data-driven decision, we don't have specific data from our own claim sources, from the public information that we have been able to glean. We do expect reductions for litigation in Georgia and a corresponding drop in premium increases. Not premium increases, a corresponding drop in premium. I'll defer to the Department of Insurance on how that will be determined and what effect that will have. Those are my brief comments, and available for any questions and any follow-up information as we develop more data to be able to supply that to the committee.
Thank you, Mr. Davis, from Enlight, and definitely keep us posted as we do this the next 4 or 5 months about anything additional you learn.
Yes, sir.
Thank you for coming.
Thank you.
All right, Bob Bruder-Matson from Faithbridge Foster Care.
Good afternoon, Chairman Reeves and members of the committee. Thank you for this opportunity to testify today. I was told that when you have an opportunity like this, you should be brief, be bold, and be gone, so I'm going to do that. My name is Bob Bruder-Matson. I serve as the President and CEO of Faithbridge, a licensed child placing agency that recruits, trains, licenses, and supports foster and adoptive parents to care for Georgia's foster children, that provides life coaches and wraparound services for youth who have aged out of the Georgia foster care system, and that provides training to foster and adoptive parents nationwide. Since we began in 2007, we've served over 6,000 unique children. I appreciate the opportunity to share my perspective today on Georgia's foster care system, which is facing a growing and urgent crisis. Georgia's foster care system is in critical danger due to an insurance crisis affecting our state's licensed child placing agencies, or CPAs, and child caring institutions, or CCIs. These organizations are licensed and contracted by the Division of Family and Children's Services to care for more than 5,000 of the approximately 12,000 children in Georgia custody. Many of these children have significant medical, behavioral, and/or special education needs. But the system that's supporting them is becoming unsustainable. Many insurers who once provided the state-required liability, auto, and malpractice coverage have now left the state. To give you an example, in 2019, Faithbridge had over 24 insurers offering quotes. By 2024, we only had one. Together, Georgia recently surveyed 58 CPAs and CCIs. Over 90% reported large premium increases at renewal, many between 50 and 250%. At Faithbridge, we have not had a single state required insurance claims in 18 years. Yet over the past 5 years, our premiums increased by more than 1,200%, and our deductibles quadrupled. This past December alone, our premium increased $250,000. Providers simply do not have enough funding from the state to cover these skyrocketing expenses. So how do we go to our donors and ask them to fund an insurance bill? Money that doesn't serve even one additional child. Today, the average insurance cost to providers is $192 per child annually. With a median premium of $173,000, CPAs and CCIs are the backbone of Georgia's child welfare system, and this insurance crisis threatens their ability to operate. If they can't afford to purchase or obtain insurance, who will care for the 5,000 children? Chairman Reeves and members of the committee, this is a crisis we cannot ignore. Without action, providers will be forced to close their doors, and thousands of Georgia's children, most vulnerable children, will be left without care. I respectfully ask for your attention and support in addressing this urgent issue. I'd be happy to answer any questions the committee may have.
And it's my understanding you're working with the insurance department as well as insurance companies, and that some federal legislation exacerbated this problem, and you're trying to find a solution to a new problem in Georgia on this, right?
Yeah, this is a national issue, and I do think it was exacerbated by a bill that passed in 2022 it was Federal Law PL 117-176 titled Eliminating Limits to Justice for Child Sex Abuse Victims Act of 2022. That removed the time limit on the statute of limitations for filing a claim.
Keep us posted on any solutions you see on this where legislation's needed, and appreciate you presenting this problem. State of Georgia's been working hard on foster care and adoption, and certainly don't want to take a step backward due to this insurance issue. Representative Williams.
Thank you. Thank you, Mr. Chairman. Thank you for your testimony, and to have gone that long with no claims, that's admirable.
Thank you.
But as you know, that's not true of a lot of people that have foster care kids. And the bad actors force you to pay like you're paying. And for children that for so many years were terrified to speak up, to put the statute of limitation, gagged them. So surely you can understand that a child who was traumatized in their young years should have the opportunity when they gain the courage and the faith to speak out. But hate to see them muzzled because of premiums. But you need help. But I don't know if muzzling the victims is the helping point.
We all get rated in the state of Georgia. Every provider gets rated, and so there is a way to understand quality. And I wish I could have brought a copy of the tool that we use. It's part of the structured analysis family assessment, SAFE. It's a very rigorous process to become a foster parent today. And I believe anybody that's adhering to that process is going to root out most of the bad actors. And I agree with you that we need to protect children. We're in the business of protecting children.
And I would like to point out Wayne Noggle with Families for Families, a similar organization, brought this to my attention shortly before you contacted me. So it is a new and serious problem with foster care and adoption nonprofits. So thank you for coming to the Capitol today.
Thank you for your help.
All right, next speaker, Attorney Remington Huggins.
Good afternoon. Sorry for the slow approach, just like one of the other speakers, Omar. I tore my Achilles coaching my nephew, so I learned I'm not as young as I used to be, but here I am. I want to thank everybody on the committee for hearing everybody out. Really do appreciate it. My name is Remington Huggins. I'm an attorney, and in the last decade, I've specialized in property insurance claims. It is I've helped homeowners from Savannah, Georgia, all the way up into the mountains of North Georgia on their property insurance claims. And a lot of your constituents were affected by Hurricane Helene. I want to talk about just a few practical things where I think legislation can change to help not only your constituents, but as well as carriers themselves. So first off is in the state of Georgia for property insurance claims, there is no statute of limitations. The policy controls the statute of limitations. So for instance, one carrier
can have a 1-year statute of limitations, while another carrier can have 2-year statute of limitations. North Carolina, there's a statute of limitations for 3 years across the board. South Carolina, 3 years across the board. Florida, 5 years across the board. Why is this a problem? It's because last week I got a phone call from an insurance adjuster on a Hurricane Helene claim, and he wants to do a reinspection on my client's property. We are less than 4 weeks from having to file suit. So extending this and having this across the board gives the carriers enough time to actually investigate the claim and do a proper investigation. Instead of me having to run to the courthouse and file a lawsuit before the 1-year statute of limitations expires. So it helps both. It helps the insurance carriers with their investigation, and it also helps the homeowners of not having to hire an attorney and run to the courthouse. I think that affects rates, and that's been a big topic today. Again, it's not a novel issue, as all of our neighboring states have something very similar to a statute of limitations, and 1 year is just not enough. When there's 3 trees that have hit my client's house from Helene, it takes more than a year to do a full investigation a lot of times for the insurance carrier, engineers, adjusters, you name it. The second thing is this, is when there's a reduction in coverage at a renewal, for instance, if you have a replacement cost value policy and at renewal an endorsement comes in and now it's an actual cash value policy, I believe the homeowners need to be put on notice of this, have an explanation of the reduction in coverage, and them sign off agreeing to this reduction of coverage. And they need to be provided an example. For instance, if you buy a couch 10 years ago for $1,000, if it's an actual cash value policy, you're getting what you would sell it at a garage sale for $100 versus getting your $1,000 back if your couch was damaged. That's a significant impact in reduction in coverage. So the state of Florida has that as a law. If there's going to be a reduction in coverage from replacement cost value to actual cash value, that homeowner is to sign off on it and have an explanation of the reduction in coverage. I think that's fair because I have clients that have been with carriers for 10 years and they bought a replacement cost value policy. They now were affected by a storm and they just found out they have an ACV, actual cash value policy. That changed 3 years ago and they had no idea. I think that's good also for the insurance carriers because of these agents that are providing these policies and selling these policies, they're going to be aware of this as well. So I think it benefits both sides to be educated on that. And last thing is we talked about, I've heard it from Commissioner King. I've heard it from the committee about educating consumers, educating insurance companies, whether it's adjusters or agents, is bringing plain language to these insurance policies. These policies are complex, they're convoluted. Lawyers literally argue about the language in a policy every single day. So I think having some plain language in the policy is going to help the consumer, it's going to help the carrier, it's going to help the broker that's selling the policy itself. I really do hope the committee takes these into consideration, and I think that legislation can simply change this, and it's going to be better for your constituents, it's going to be better for the insurance companies. So if anybody has any questions, I'd be more than happy to answer those.
Mr. Huggins, if you can get us the statute of limitations that you mentioned and any statutory references from the other states, I'd like to take a look at that. I'd like to point out Hayden Willis, an attorney in Moultrie, who's one of Representative Chaz Cannon's constituents, brought a similar issue, if not the identical issue, to our attention based on Hurricane Helene and a school building claim. So this is an unusual thing we've got going on in Georgia, and I appreciate you bringing that issue forward today. Thank you.
Yes, Chairman. Thank you all.
Eric Jackson from State Farm. Okay. All right. I think we may have gotten to the end of the list. Is there anyone here who wanted to testify to the committee? We've got Mr. Manders, but does anybody else want to testify? Going once, going twice. I want to thank all the witnesses for coming here today. Mr. Manders, thank you for your patience. We'd love to hear from you. Any information and light you have to shed on the topics that have been discussed and any others that you think are important for the scope of this committee. So the floor is yours, and let us know what you have to say, and then we'll take some questions and adjourn.
All right, thank you, sir. Just one thing I want to clarify. The commissioner said I've been there 34 years. It's been 38. And when I started, we did not have these. There were no computers in the department. It was all hard copy. So a few things have changed. Chairman, I would like to offer coming to some of your other meetings, because I know some things got shifted around here. So I'm going to skip around and go to some of the key points. I had some points on the overall overview of the department and things of that nature. I'm going to skip that and go right to some of the guts. Just on a couple of comments that were made here today. 4% is the amount of investment income the industry's making in the market. I had our financial guy run that. So basically 4% on the P&C side and 4% on the life and health side is the investment income. And investment income is included in the rate filing process. It is included. They have to deduct their profit, their investment income off. But let's, I'm going to get to, I'm just going to start off with Helene, just to give you some raw numbers here. You see the total. Well, first, let me start off. Helene is the largest single event in losses in the state of Georgia. It's our largest event ever. So it's the Katrina of Georgia. Total claims paid, 164,000, right at 165,000 claims. 2.86 billion in losses been paid to date, with anticipated another 167 million left out there. Total outstanding claims. That doesn't mean the claim hasn't been worked on. That means it's still outstanding, about 5,500 claims. The 5,500 represents about 2.6% of the number of claims outstanding. So that's putting us right at 97% of the claims have been paid and settled. The estimated dollars, that is probably more complicated claims. That's about 5.8% of the total amount paid is left on the outstanding. So here, just a few more market conditions. In Georgia, we have 1,700 companies licensed. Of that, 1,100 is actively writing some type of insurance product. Life, health, P&C. So there's 1,100 companies actually writing. 400 are writing personal lines, over 400. 210 are writing homeowners, and about 200 are writing automobile coverages. You can see in Georgia, our premium volume statewide is 33 billion. That's a B. We're the 10th largest state in the country in premium volume. And the trucking and commercial auto, we've got about 8 companies currently writing commercial auto in the long haul trucking in Georgia. Threw in a slide on our company withdrawals. This is since 2022. We've had 134 programs withdrawn from the state. Why did they withdraw? Many reasons. Could have been profitability. Could have been they didn't have enough premium in the program to keep it up and running from a competition standpoint. There are a number of reasons companies may look at their book of business and decide to pull out of certain lines. But 36 personal auto and home programs withdrew, and 35 commercial auto and commercial property programs withdrew. Believe me, I've been in here a long time. If a company can make money, they're going to stay here and write. I promise you. So here's, numbers from the NAIC. And I've highlighted a few lines. This is the underwriting profit and loss by each line of insurance over the past 10 years, starting from 2024 to 2023. And this is by line. See the top line there is that it is auto liability. That's not all of the, you got the auto liability, private, the physical damage, and then the total auto. As you can see, the liability line, an average over the past 10 years has produced a minus 14.7% profit, minus 14.7% profit. Going down to commercial auto, minus 23.2, and you can see each of the respective years there. Homeowners, minus 5. You can see it's flopped. That's for catastrophic losses. That's what we're seeing in the homeowners line, the years we've had catastrophic losses. Med mal, minus 26, other liability, minus 7.3, products liability, premises liability, minus 20.2. So there is sort of one common denominator among all these lines as we go through them, is their liability lines. And liability lines includes attorney involvement. So there is a common denominator among the yellow lines, all except the homeowners line. The homeowners line is more of the property losses due to catastrophic injuries. We talked a little bit about rate filings. We talked about definitions of the rate making standards in the state. Cannot be excessive, inadequate, or unfairly discriminatory. And again, our hands are sort of tied on the excessive in that if a reasonable degree of competition exists, we do not have the authority to disapprove a filing. Actually, we do not have the authority to disapprove a rate filing in the state of Georgia. We do on forms, but there is not a specific statute that says we have the authority. We have. We've probably exceeded our authority, but we have disapproved filings. Most of the time, those filings are negotiated, but the process is if we deem a rate excessive, we have to issue an order to show cause why this rate is not excessive. We have to go through a hearing process, and then surely we will win our own hearing, but if we happen to lose that hearing and a rule against the insurance company, we win the hearing, they've got a right to go to Superior Court. And so it's a very complicated process, but that is the process of how we reject, the legal process of how we reject a filing. But most of these filings are negotiated. I counted 40% of the rate filings received by our office are negotiated downward. 90% of the rate filings that come into our office have some type of correspondence, and we're asking them to change something within that filing. Okay. We mentioned a while ago, the professor mentioned telematics, credit scoring came up, and the modeling. What we're seeing now is the insurance modeling. It includes a component of credit score and other variables that are included that the companies are using. They're trying to dig down and dissect and get to the rate on an individual, pretty much on an individual basis. Where when I first started in the industry, you had about 5 or 6 rating variables for personal auto. Now there can be 50 to 80 variables within a model that the company's looking at. And be honest with you, we spend probably more time on those models and reviewing those models, how fair are those models, what variables are they looking at, than we do on the rate. The rate component, a lot of that is programmed. It's, a lot of it's formula based, and our actuaries, we use outside actuaries to review those filings. And but the modeling takes up a lot of our time. A lot of companies are wanting to use demographic type variables. We rip all those out. Georgia does not allow any demographic variables. We'll allow, population. There's data mining going out there. We had one model where a variable was used, how many family dollars within 5 mile radius of your home. That was one of the variables that was used, applied for in the model. Of course, that was taken out. So we do spend a lot of time on the models. Inadequate is basically where a company wants to come in and buy the market. That usually involves the solvency concerns of the company. We actually, unfortunately, have one going on right now. So it does happen. It's far and few between, but it does occur. Unfairly discriminatory. That's where you got two identical risks and you're treating them different. You like risks need to be treated the same way. So if you're two identical risks and you end up getting two different rates, then there's something in the rating plan that's causing it to be unfairly discriminatory. So those are the three statutory components that we are bound by in reviewing the rate filings. Let's talk a little bit about what the triggers. We talk about prior approval and we've talked about filing use. The commissioner mentioned that. Prior approval is just what it sounds like. We have to physically, boom, put the stamp on it before it can leave the office. Forms of prior approval. All forms, when they're filed, are prior approval. We have 90 days to review the form, and we can extend that 60 more days. So we basically have 150 days to review the forms. The review's done a lot quicker on that. I mean, form review is just as important as the rate review, to be honest with you. That's the contract. That's the contract that's going to court. We have to review it for statutory provisions to make sure certain statutory provisions are in there. We have to review it compared to case law to make sure any ruling out there is consistent through the policy. And then some of it is just a fairness position, whether this makes sense, is this fair for the consumer? So that the other component of prior approval is in private passenger auto. In private passenger auto, there's basically two filings made. There's one filing made for the statutory minimum limits. Okay, 25, 50, 25 limits are our statutory limits. So any filing that is filed with us that is the minimum limits, we have to physically approve it. Well, what has happened is some of the companies now file 25, 50, 30. They don't file the minimum limits of 25, 50, 25. So that exempts them. It gives them a loophole. It exempts them out of filing a prior approval filing with us. So the other filing accompanying that is a filing use filing. That's all your optional coverages, any increased limits, your comp collision, MedPay, all those filings come in as a filing use filing. It used to be that went into effect immediately. As soon as they filed it, there was no waiting period. Those components went into effect immediately. So the companies that were using the loophole at 25, 50, 30 would make a filing under the filing use and implement it immediately. And we had no say. We didn't even have a chance to look at the filing before it was implemented. And we had companies doing that. The legislature back in 2023 did pass a law under the filing use component of this to have a 60-day waiting period. So at least we may not can stop it, but we can at least have a chance to take a look at it. And if there are problems with the model or problems even with the rate, that we have a chance to look at it before it goes into effect. So that did help, but the loophole was still in the law. These are some, and we can probably get at this into a later meeting, but these are some of the key rate-making elements that you're going to find in a filing. And I actually brought some sample filings if we may can get into it at some later point. But so we're going to talk a little bit about calendar year versus accident year. When you get into rate making, everybody's probably familiar in here, especially the insurance committee members, of the yellow books, the annual statements. When the insurance company files annual statements, you can throw that out the window when you're going to make rates. All that is a snapshot in time of transactions that took place during that calendar year. So I could have losses being paid this year in this calendar year that was from a policy or an accident that occurred 3 years ago because it's been hung up in court. All right. So the annual statement is to no use in making rates. What we use is what we call accident year data. It matches up an actual calendar year, the premium collected in that calendar year, and the losses tied back that occurred in that year to those premium dollars. So it's matching up. We're trying to get everything up to a present value. Okay, so we want to match all our premium collected in a certain time frame with all the losses associated. And that's why the data a lot of times to catch up. Older data is better data, okay, because you have more certainty of claims that have worked their way through the court system. So yes, we look at the expense ratio. So doctor from Georgia State mentioned that 30% is average, pretty close. 30 to 35 is what we see in homeowners. Around 25 to 28 is what we're seeing in the auto line is a expense component. So basically what they do is they take their expenses. So one minus their expenses. So one minus, say it's 30%. So that leaves me 70% is my expected loss ratio. Now the expenses include, as he said, commissions, overhead. One thing he didn't mention was taxes. Taxes are included in that. So that develops your permissible or your expected loss ratio. So when you go through a lot of this, these items, you're going to come up with an ultimate loss compared to what their expected loss. So let's say, I'm running, my expected loss is 70%, and I run it at 80% loss ratio, then I am losing money. I'm expecting 70%, and now I'm running at 80%. Okay. And these numbers are going to include investment income when you start figuring the indications. So as I said earlier, you're trying to get the premium dollars and your losses up to a current amount where you can compare them. All right. So you take your premiums, you're going to adjust your premiums up to the current rate level. So the company has had rate changes over the years, over the past 3 years. Okay. So what you're going to do is factor all those rate changes up to the current date. That's inflating the premium. And when we're looking at a loss ratio, we're looking at losses over premium. Okay. That gives us our loss ratio. So we're inflating the denominator. We're increasing, from a consumer standpoint, you're getting the premium up to to the current rate level. But we're going to do the same with the losses. All right. We're going to have our current losses, what we've paid, and our incurred losses. So those losses haven't paid out. They haven't developed out. Okay. So we take our past losses and look at the insurance company's track record on how they reserve those losses. So I go back 8-10 years and I track the insurance company's losses quarterly to develop what we call ratios to get their current losses projected. So I'm taking my past experience on how well I reserve those losses. I could have over-reserved or I could under-reserved. Most of the time it's under-reserving because usually as losses get older, they develop larger, okay, especially if they're going through the court system. So normally So the companies, I've seen filings where the development was below 1. They decreased their losses because they over-reserved on their losses. So it's a check and balance with the insurance on their losses. Okay, then they'll apply a trend factor, and that is the one that can get a little spicy from time to time. But we've talked about several things, tort reform being one of them. We are expecting insurance companies to make an adjustment in their trend factor. So trend is things you apply to the rate that are not currently contemplated in the rate structure. Let's take tariffs. Let's say tariffs take place. You don't think the insurance companies are going to come in and apply a trend factor if they know auto parts are going to be 40% higher this coming year than they are now? Yes, they're going to account for that. So the reverse is true. They ought to be accounting for tort reform. There ought to be an adjustment. We don't know what that adjustment is. The actuary will have to come up with that. But there should be an adjustment to reduce the trend factor based on tort reform. And then again, the investment income is included in this, and then you come up with an indicated rate change. So you come up with what we call an ultimate loss over the current rate value, and that's going to give us that's our ultimate loss ratio over our premium, and that's going to give us our indicated rate level. So that is gone through usually by every line of insurance. Like if an auto carrier makes a filing, the bodily injury is going to go through this process. The property damage coverage is going to go through this process. Every coverage in the rate filing will go through this process. So some cost drivers. We'll end up with this, Chairman. And as mentioned, the frequency and severity of claims, they're both up in personal lines. We're seeing it on homeowners. We're seeing it on frequency. One of our more troubled lines right now is, believe it or not, is our personal umbrellas. Personal umbrella rates. Traditionally, you go buy a personal umbrella for $250, $300. Well, rates are shooting out the roof on our personal umbrella policies. Population and density. Everybody knows. Everybody drove in here this morning. They know exactly what we're dealing with when we coming into downtown. Litigation. Litigation is a component of this. All the construction we have in Georgia and on our expressways. Inflation, repair costs, supply chain issues, and policy changes. So all these components are cost drivers in the system. It's not any one of those factors. It's all of those factors. And when you combine all those factors into one of these troubled coverage lines, that is what's causing a lot of the problems. Again, our workers' comp was, when I started at the department, workers' comp was the worst line ever. When we were seeing companies filing for 50 and 60% rate increases. Guess what? The last 20 years, there's only been one small increase. Rates have decreased almost 60% in workers' comp. So they've made a lot of reforms in the workers' comp system. We put in a medical fee schedule that has gone into the workers' comp system. Workers' comp is a no-fault system. The employer is trading off not being able to be sued to providing certain benefits. So the theory is to help reduce some of the litigation in that, but workers' comp is litigated still quite a bit. And but overall, that has been probably our best line in the state over the past 20 years. Like I said, our rates are down over 50% during that time period. You don't see that. Frequency in workers' comp has gone up a little bit. Severity has gone up just a little bit, but the frequency is way down. I don't know if that's new technology. I don't know if that's, workplace safety, new items being developed in the workplace to reduce accidents. But it can be done. We can get a line of insurance to be profitable, and hopefully, with the committee's work, with potential legislation, I think we will have a handful of things that we will suggest legislatively. Curious to see the effects of tort reform and how it's going to have effect on our market. And we did not do a 1114 data call this year. We will be doing a 1114 data call next year. So, Chairman, any questions?
Thank you so much, Mr. Manders. We do have a few questions. While we're pulling Representative Emery Donahue up on screen, he's on Zoom. I'll call on Democratic Leader Carolyn Hughley.
Yes, ma'am.
Thank you, Mr. Chairman. Thank you so much for the presentation. I'm curious, the timeframes that you indicated for your review process, 45 days on some, 60 days on others. Do you currently have in the department the manpower and the expertise to meet these timeframes?
That was in the first part of my presentation, and I skipped that. So let me address it. We currently have 14 employees in the department that reviews the rate filings. 14 employees. That's not a lot. We are actively trying to hire. One good thing is we do have one credentialed life and health actuary. We have 3 other actuaries that are getting their courses. They're going through their studies right now. The commissioner has worked with us. We put in a program where we are helping them pay for their exams, and they actually get a bump in salary each exam they pass. So it's a very good program to try to keep. It's very hard to hire actuaries. We have to outsource. We do outsource a lot of our more complicated filings. I did have a slide that showed our number of filings. It's about 3,000 rate filings a year and about 3,500 form filings a year is what we receive by analysts. It's about 750 to 800 filings a year that they have to act upon. And some of these rate filings can be very, very complicated. In the form filings, I mean, you may get a commercial package, one that is providing property, commercial auto, all the different business income, all those different coverages. I mean, those filings, they may be 200 or 300 forms to review in one filing package. So yes, it has gotten better. Our staffing has gotten better, but we still have several openings. We worked actively with Georgia State and University of Georgia. They both have pretty good risk management programs. Commissioner and I do go visit their senior classes every year and give a course on the regulatory environment. So both programs do have us out, and we do try to do some hiring while we're there. So
Glad to hear that you and I have both been around for a little minute, and there was a time frame when the department just could not keep up in that regard. So I'm glad to hear you're making progress. Now, the other thing, you showed us a list of factors that affect rates. So how are we going to determine the effectiveness of the tort reform measure when it's only one of 10 or however many factors that you showed?
I think on an overall basis, you will see if it's going to have an effect, you're going to see the overall reduction in losses. Okay. So a lot of those other variables, they're able to collect data on telematics or certain limits of coverage. All those rating variables, you'll be able to collect the data in the stat plan. And then you're going to see the overall effect of rates coming down. That's going to be the potential effect of tort reform. Yep.
So then we'll know 3 years from now?
Yes.
Okay.
Yes.
Mr. Manders, I'm going to channel Emery Donahue here because we have worn the battery out on his phone and his iPad today. he sent me a question earlier, and I want to thank Representative Donahue for bringing several of the speakers here today and for being very engaged in this. I know he'll be here in person on the other meetings. He had an out-of-state obligation today, but his question is a repeat scenario he's seen over the years on constituent service is an adjuster comes out in dress shoes, doesn't want to get up on the roof. They may have a drone, they may not have a drone, but they aren't a roofer. They deny the roof claim, or they say you can patch 100 shingles on a 3,000 square foot house. It's going to look bad. It's not something that's going to be anything any homeowner wants. What happens if you have a scenario like that? If you're a homeowner and you're getting the runaround on a claim like that?
We do have a portal online. You go to our website and you go online, you put in your policy number. It'll be assigned an analyst or investigator, and they will reach out to the company. Per the contract, it's a judgment, and you repair or replace to like, kind, and quality. And so there's judgment there. So our consumer services, I hate to hear that we may not have followed through on something a while ago, and I'll be, if one of our earlier speakers, I'd be glad to get your card and take that information back to our consumer services.
Thank you.
But
We've
they've
actually
been,
got Representative Donahue now, so let's put him on. All right, if you'll, Representative Donahue, if you'll unmute, floor is yours. Okay, you're on. Okay, I think we may be able to hear you.
I'm going to attempt this. I'm down to 3%. Thank you, Mr. Chairman. A lot of the times what's happened is we'll call and go for the review. And with the review, what happens is it seems it's always in favor of the insurance over constituent or the policy holder. And several times I've dealt with probably 100 in the last 11 years that people have come out, they do not climb roofs, they do not completely look at the appraisal value if you had an accident or a damage to your house. And used to, they were experts. They came out, they handled things professionally. And I'm sorry, I'm down to 1% now. So I'm going to probably just hope that I can have somebody else tell me. Eddie pays attention, Chairman Lumsden, every once in a while. Maybe he can enlighten me what the answer was. But thank you guys very much. And thank you, Mr. Speaker.
I think I got the.
And I guess while we're here, if you can help run through who are some constituent service people for legislators to know about from the office.
Bryce. Raise your hand, Bryce. Bryce will be our key.
Bryce Rawson.
Bryce Rawson will get you where you need to be or where they need to be.
Thank you.
Our director of consumer services is Joanne Oney. She's very good, very thorough, and she can look at these cases.
Thank you. Governor's Floor Leader Sue Hong.
Thank you. I have a lot of questions, but I'm going to limit it because I know we're all hungry and ready to go. So I probably will catch you afterwards. You had mentioned before about if the department finds that rate increase is excessive, there's a whole hearing process. In the last 5 years, or there's a consent between the department and the insurance company. In the last 5 years, has it all been resolved by consent? Has any of it gone to hearings? Does it ever go to a hearing?
I've been here 38, and I can recall one.
Okay.
It was a workers' comp hearing with NCCI.
Okay.
35 years ago, probably.
And if we can get a copy of the slide, since I
Yes.
guess you did not
Yes.
have a chance to go through all of it.
And I will hopefully be at one of the other meetings also.
Thank you so
All
much. The key rate making components. So do you actually run your own analysis on whether or not there should be a
They-
rate increase?
They submit their analysis and then we ask questions if anything does pop up. All that's, computerized at the company level. Certain filings, we send our outside examiners to them and review the basic data that's been submitted to make sure it's consistent. It's within, that we're looking at correct data.
And based on that data that you and what you determine and what they're submitting, that's where the negotiation starts as far as whether or not it's excessive or not, correct?
Right.
Okay. And,
Well, excessive or reasonable.
or reasonable.
Oh, yes.
Okay. And is any of that data public or any of that data available
you-
for us to
you-
review?
I think in the past I've heard transparency issues, but guess what? Everything we do, every email we send the company is public record and it's in the filing. Every filing is on our SURF system. That was one of my previous slides also. We have an electronic filing system, NAIC supports that. We don't have to pay for it. And every filing is public record. There's a public log on, and you can search by company, you can search by line of insurance, whatever filter you want to put in there to search. And every filing can come up. You can see what they submitted, and you can see what they were given or negotiated to.
And I had mentioned this is my last comment I had mentioned to the commissioner earlier about the underwriting profitability and kind of comparing it to other states. If you guys can provide that data to us as well, would like to.
Remember the document I had with
The chart.
with the chart with the yellow? I do have that for all other states. So,
Thank you.
all right.
Before I turn it over to Chairman Gullett for a question, one follow-up I had, I remember today a $20 million fine. I remember a reference that sometimes that may not be a deterrent because it's, getting paid out of profit. And you mentioned
$20 million is a deterrent.
but you mentioned the 4% and some of the big numbers. Are there any ways that we could change the status quo in Georgia to make it a situation where if you have something that gives rise to a $20 million fine, you're not going to be able to, keep your rates the same and going up?
Well, the comment earlier about is that included in loading that back into your rates? No, that is not. Administrative fines cannot be used in the rate making process. By statute, our exams, when we do an exam of an insurance company, when we review their rate filings, the exam costs aren't that much, anywhere from $5,000 to $8,000 normally, which is not that big to have an actuary or a team of actuaries to go look at their filing. By statute, they can't use that in their underlying, they can't load that into their expenses when they are making rates.
Thank you, Chairman. So, on the 4%, is that 4% of, what's the dollar amount of 4%? Do you
I
have?
don't know the dollar.
Billion.
The overall,
Not the billions,
I
right?
don't know. We're throwing these billions and billions. Well, these are
Scale, I get it.
tremendously large.
Is that, so
industry.
is it
You can
Georgia?
figure, what was the figure? 33 billion was the premium. Georgia's written premium.
So is that just in Georgia, the 4%, or is that across,
Well, that's
across the US, the 4% is the average?
that's Georgia.
Georgia
Georgia.
specific?
Yes.
Okay. And so when you talk about 20 million and billions of dollars of them, I don't know how you would really, how that would even, it's just such a small percentage of being baked into rates. It just wouldn't really, or into the money. It really wouldn't matter truly in the scheme of things. But I do appreciate holding insurance companies accountable for when they do wrong. Do we have a ranking of our like defense cost containment in Georgia versus other states?
Don't know if we have a comparison by state. but that is included in the filings. Each carrier
So each carrier puts
will
that into the
submit
filing
that
too?
into their, you've got loss and the LAE included, which is defense and cost containment. Yes.
Okay. And then last question is related to no pay claims. I know Representative earlier mentioned that.
Well, I'm glad you mentioned that. I was trying to take notes of things that were coming up during our discussion earlier. We do have a directive out on that, the commissioner can do bulletins and directives that sort of expands or clarifies the statute, gives us sort of our game plan on how we're interpreting certain things. And we do have a bulletin that if it's just an inquiry, that it cannot be used against you as a file claim.
Do you know when that was issued? This has been I know it's a problem for, Representative McCullough. It's been a problem in my
It was
district.
back during the auction years. It was probably in the 90s.
Wow.
I can get it. I
Yeah.
can get a copy of it.
So it's definitely being used. I have a number of constituents, I think there's been several legislative bills that have been
Right.
dropped.
Well, just for the committee's knowledge, we do have 3 market conduct exams going on right now with several major carriers on roof issues, on using drones, on using satellites. We're digging into the technology. Some states have issued some bulletins and directives concerning the use of satellites and drones in the underwriting process. Was triggered by our Consumer Services Division of having some unusual amount of non-renewals for these companies.
That's a national issue. We've talked about it in coil before, and it's even the low flying air. It's not even the drones. It's the low flying aircraft that is really, really high.
Got a couple, they've got the wrong house. They got the wrong address. And so we've got so we're looking at possibly doing a bulletin or directive, possibly coming to y'all for legislative help. I'm a homeowner writer. I'm an insurer. I write a home with a 7-year-old roof. All right. I write it. That's a pretty neat roof. I write the home. Guess what? 10 years later, it's a 17-year-old roof. You knew that when you wrote the business, and you're in the business of writing homeowners insurance. Roofs are going to age. So that's part of it. That's part of the game you're getting into when you're an insurer. Some things, unfortunately, we're all going to age, and the roof's one of them, So.
Thank you for your time.
All right.
Thank you so much, Mr. Manders.
Thank you.
Before we adjourn, let's talk about the next meeting. Again, it's September the 19th at 2:00 in Savannah at Georgia Southern's Armstrong campus in Savannah. We will have Professor Hartwig from the University of South Carolina, another knowledgeable insurance professor, giving an overview of insurance issues that fall within the scope of this study committee. We will talk about homeowner claims and storm claims in more depth. And I would like to just open the invitation up to people knowledgeable about solutions and problems within the scope of the committee to come testify in Savannah. Couple of things. There was a handout about the Macon meeting, and it had Macon County. The Macon meeting is not in Montezuma. It's in Macon, Georgia, at the big Georgia Farm Bureau headquarters, not the Macon County Farm Bureau down near Americus. Let's see, insurance industry. The next 4 meetings, this is your opportunity. If good things are underway, if you're foreseeing rate reductions, if you are making changes following inflation and storms and all that, please let us know about that. If changes are being made in the status quo, this is opportunity to do it. This is a great opportunity to let 11 million Georgians, your customers, know if you've got good prices and good values. So by all means, come in there. Georgia insurance has a great history of innovation. You look at Primerica in my area in Gwinnett County was started by a high school football coach who thought that there was a market for term life insurance, and he brought an innovative product to market, and now he and his family own half of Highlands, North Carolina. So the insurance industry, it is something open to entrepreneurship, and this problem has solutions that can benefit the industry in addition to customers if you get out there and solve these problems. So we've got several months to highlight insurance market issues that are being addressed. but we invite speakers in Savannah and the other next meetings. The reference to the district attorneys, I would encourage members of the committee engage with your district attorneys, members of the public and the insurance industry and legal and claims people. Definitely, you got 17 members of the committee. Let us know follow-up and information that you have. We're going to try to put as many of these handouts today online as possible. And also, we welcome things that would be of benefit to the public to know about managing your policies, your deductible, shopping your policies, empowering customers of making good insurance decisions. So thank you for your time today. This is longer than we expected, but it was time well spent because we are digging deep on this problem in search of solutions that will make insurance more affordable for hardworking Georgians. So we are adjourned.